Sir, very happy evening to all. Sir, we are moving into the last topic of our discussion, that is computation of total income. My dear lovable students, this is our 15-mark first question in our exam, computation of total income. The beauty of this topic is nothing new we are supposed to study, only thing is practice. We need practice. With this background, we are going to get the first 15 mark into our pocket. Question number 1, this is an ICI illustration number 1. Mr. A, aged 32 years. Assessee is an individual. Assessee's age is 32. He is employed with XYZ Private Limited on a basic salary of rupees 80,000 per month. That means they are testing your salary knowledge. So you tell me 80,000 into 12 comes to 9,60,000 rupees is the annual salary. Question did not say that he has retired and all. He is still working. He has received transport allowance of 15,000 per month and HRA of 20,000 per month from the company for the previous year 25-26. You have to quickly download from your brain that, sir, optional tax regime and default tax regime. Under default tax regime, transport allowance, is it allowed? HRA, is it allowed? No, sir. Both are taxable. Am I right, sir? Under the default tax regime. Whereas under the optional tax regime, you can claim exemption provided if it has been spent for official purpose. He has paid rent of 25,000 per month for an accommodation in Delhi. You can claim HRA under section 1013A under the what tax regime? Optional tax regime. Mr. A has paid interest of 2,10,000 for housing loan taken for the construction of his house in Mumbai. They are talking about 24B. Sir, under default tax regime, there is no 24B at all. But under the optional tax regime, you can claim 24B up to a maximum of 2 lakh. Construction of the house is completed in March 2026 and his parents living in that house. That means the property is a self-occupied property. There is no concept of self-occupied property under the default tax regime. These are the other information, my dear lovable students. Contribution to PPF, 1,50,000. You are entitled to claim deduction under ATC if you are traveling through the optional tax regime. Contribution to pension scheme referred under 80CCD. They themselves mention that it is 80CCD, but the only problem is 80C plus 80CCC plus 80CCD is equal to 1,50,000. So maximum deduction for both will only be 1,50,000. Payment of medical insurance premium for a father. Father is second category. Parents are allowed. Whose age of 65, higher limit of 50,000 will be allowed as deduction. Under 80D. Payment of medical insurance premium for self and spouse. It will be restricted to 25,000. That is layer number 1. Compute the total income and tax liability of Mr. A for the assessment year 26-27 in the most beneficial manner. That means we have to calculate both under the optional tax regime and also under the default tax regime. First, I am calculating under the default tax regime. Very easy question. One of the straightforward. Only 2 heads are there: salary and house property. My dear lovable students, participate. Think along with me. I am going to calculate the total income as per the default tax regime. Default tax regime. Super. First one, income from salary. Can we calculate income from salary? Basic salary. Throw the answer to me. What is the monthly salary? 80,000. So 80,000 into 12, 9,68,000. Comfortable with basic salary? Transport allowance, my dear lovable students. Under the default tax regime, transport allowance, you are not entitled to claim deductions or exemption under 1014. So they are saying that monthly 15,000 per month is the transport allowance. So 15,000 into 12, 1,80,000 is fully taxable. HRA received, sir, it's a work from home concept. There is no exemption under 1013A. So HRA of 20,000 per month. So 20,000 into 12 comes to 2,40,000 will be the taxable HRA. So 9,60,000 plus 1,80,000 plus 2,40,000 comes to 13,80,000 is a gross salary under the what tax regime? Default tax regime. You tell me default tax regime is I love you da or I hate you da? I love you da. Hence the government will give you more deduction, 75,000 you can claim. So from 13,80,000, if 75,000 standard deduction goes, means 13,05,000 is the taxable income from salary. That's what income from salary, 13,05,000. Any problem to you? No, sir. Come on, man. Income from house property. Under default tax regime, there is no concept of self-occupied property at all. Sir, for a self-occupied property, generally GAV will be nil. Less LT bar MT cannot be claimed as deduction. NAV will be nil. Less deduction under 24A, nothing. Less deduction under 24B, actually you have paid interest. But under the default tax regime, you are not entitled to claim deduction. So not applicable. Nil will be the income from house property. Can I proceed with the third head? There is no information regarding PGBP. There is no information regarding capital gain. There is no information regarding IFOS. So salary will be act as the gross total income. And if you are traveling through the default tax regime, there is no question of chapter 6A at all. So the taxable income is 13,05,000. 13,05,000. As we all know that under default tax regime, 4 lakh rupees is the limb. Up to how much lakh? 4 lakh. There is no tax liability at all, nil. 4 lakhs to 8 lakhs, gap of 4 lakhs at the rate of 5% comes to 20,000. 8 lakhs to, actually the income is 13 lakhs. Am I right, sir? 12 lakhs. So again 4 lakh into 10% comes to 40,000. Basically more than 12 lakh, which is 1,05,000. Am I right, sir? Into 15%. So 1,05,000 into 15% comes to 15,750. 15,000. So 20,000 plus 40,000 plus 15,750 comes to 75,750 is a tax payable. Is the taxable income exceeds 50 lakhs and all? No, sir. That means, my dear lovable students, sir, you are not liable to pay any surcharge. Let me ask you one question. Under the default tax regime, what is the limit for 87A? If the total income does not exceed 5 lakh is the limit under the optional tax regime. Equivalent limit for the default tax regime. How much? If the total income does not exceed 12 lakh. Sir, have the total income exceed 12 lakh? Yes, sir. Because it is 13,05,000. You are not entitled to claim 87A rebate. So, for 75,750 into how much percent? 4% comes to 3,030. So the total tax liability under the default tax regime is 78,780. Are you comfortable with first calculation? That's it, man. Come on, man. Number 2, I'm going to calculate the same under the what tax regime? Sir, income from salary, yes, there will be change in income from salary because of standard deduction. You tell me, will the basic salary change? No. The same basic salary, 9,60,000. Will the transport allowance change? No. It is fully taxable. Because they have not said that transport allowance has been used for the purpose of the employment purpose or official purpose. HRA received. Sir, what is the HRA per month? HRA received from the employer? HRA of 20,000. So 20,000 into 12, 2,40,000. You are entitled to claim exemption under 1013A under the what route? Optional tax regime, which is least of the 3. Rent paid in excess of 10% of salary, actual HRA received, or 50% of salary in metropolitan cities like Mumbai, Calcutta, Delhi, Chennai, and 40% in other places. Am I right? What is actual HRA received? 2,40,000. Rent paid in excess of 10% of salary. What is the rent paid per month? 25,000. So 25,000 into 12 comes to 3 lakhs. 3 lakh is the rent paid for the whole year. I will not take the entire rent paid. I will consider only the rent paid in excess of 10% of salary. What is the salary? 9,60,000. Because salary means basic salary. Plus DA if provided in terms of employment, plus commission as a fixed percent of turnover. There is no DA, there is no commission. So my dear lovable students, what is the salary? 9,60,000 into 10% comes to. So you have really paid a rent of 3 lakh. That 3 lakh will not be considered. Out of that, 10% of the salary will be disqualified. Only the remaining 2,04,000 will be treated as rent paid. Number 2, actual HRA received is 2,40,000. Where you have taken for rent? Delhi. Is it metropolitan city? 50% of the salary, which comes to 4,80,000. You tell me whichever is lower. 2,04,000 is what lower. So from 2,40,000 HRA received from the employer, 2,04,000 is exempted. Only 36,000 will be taxable under the optional tax regime. Now, what is the gross salary? 11,80,000 rupees is the gross salary. Am I right, sir? Sir, 9,60,000 plus 1,80,000 plus 36,000 comes to 11,76,000 rupees is the gross salary. Am I right, sir? Sir, if an employee is traveling through the optional tax regime, I love you da, I hate you da. I hate you da. You are not entitled to claim higher limit of 75,000. You are entitled to claim only. So 11,76,000 minus 50,000 comes to 11,26,000 is the income from salary. Is the income from? Very easy calculation. For this 11,26,000, my dear lovable students, up to 10 lakh and more than 10 lakh. More than 10 lakh. More than 10 lakh is 1,26,000. This into how much percent? So 1,26,000 into 30% comes to 37,800. Am I right? Up to 10 lakh, 1,12,500 because the age is only 30s. What is age? 32. That means normal assessee only. Am I right? So 1,12,500 plus 37,800 comes to 1,50,300. This is the what? Tax. Will you calculate tax on salary or total income? Have we reached the total income? No. Still this guy is having income from house property. Since this guy is having chapter 6A deduction, am I right, sir? All are allowed under the optional tax regime. That is a difference between the default tax regime and the... So don't stop here. Don't make mistake. This is an area where students will quickly calculate the tax payable. No. Please calculate in the proper format. Income from salary is only 11,26,000. Only one head you have finalized. Come on, man. Income from what property? House property. GAV will be nil because the property is a self-occupied property. LT bar empty, not given. NAV, nothing. 30%, nothing. Sir, 24B, if you satisfy three conditions, that means loan has been taken on or after 1/4/1999. If the loan amount has been used for the purpose of construction or acquisition of the property, such construction or acquisition should be completed within a period of 5 years from the end of the financial year in which the loan has been taken. You are entitled to claim maximum limit of 2 lakh. What is the interest paid? 2,10,000. Can you claim, sir, 2 lakh? Yes. That means deduction under 24B, 2 lakh. Then loss from house property will be how much lakh? Sir, that's what they have written here. Loss from house property, 2 lakh. Are you traveling through optional tax regime? Under optional tax regime, inter-head adjustment is possible. Up to an amount of how much lakh? 2 lakh. There is no PGP information. There is no capital gain information. There is no IFIS information. Then, my dear lovable students, your gross total income after set off, sir, 11,26,000 minus 2 lakhs comes to 9,26,000. Am I right? From that, you are entitled to claim chapter 6A deduction if you are traveling through optional tax regime. Under 80C, PPF, 1,50,000. Own contribution to pension scheme, which is 80CCD. 80CCD. Am I right, sir? Own contribution. How much rupees, man? 50,000. Sir, 80D, medical insurance premium paid by check for self, spouse, category number 1 will be restricted to 25,000. For father who's a what citizen? Senior citizen will be restricted to 50,000, which is layer number 2. So, 1,50,000 plus 50, 2 lakh plus 25 plus 50 comes to 2,75,000 is the what 6A deduction? Chapter 6A deduction. Come on. Contribution to PPF. You are entitled to claim deduction under what? 80C. Contribution to pension scheme referred in section 80CCD. 80CCD. Sir, 80C plus 80CCC plus 80CCD subsection 1. 80CCD subsection should be restricted to 1,50,000. What is the problem? Sir, out of this 50,000, you can claim it as 80CCD subsection 1B. No problem at all. Because employee's contribution itself over and above 10% can be claimed it as deduction under 80CCD subsection 1B. So you think that this 50 you are claiming under 1B and this 1,50,000 you are claiming under 80C. Any problem? No, sir. That is why they have not restricted to 1,50,000 rupees. Oh, appadi. Because our mathematical formula is 80C plus 80 CCC plus 80 CCD subsection 1 is equal to 80 CCE. That is equal to 1,50,000. Am I right? Sir, if an employee's contribution exceeds 10% of salary, then over and above 10% of salary, up to 50,000, can we claim it as deduction under 80 CCD subsection 1B? You claim this 50,000 under 80 CCD subsection 1B. Anyway, 80 CCD subsection 1B are not within the limit of 80 CCE. Able to appreciate. So 2,75,000 is the allowed chapter 6A deduction, my dear lovable students. So from 9,26,000, if you reduce 2,75,000, the taxable income will be 6,51,000. Taxable income is. Now for this 6,51,000 only, we are liable to calculate the what man? Tax. So 6,51,000 should be classified into 3 categories. Up to 2,50,000 nil. 2,50,000 to 5 lakh at the rate of 5%. More than 5 lakh at the rate of 20%. This will be 12,500. Am I right, sir? Then more than 5 lakh means 1,51,000 into 20% comes to 30,200. So 30,200 plus 12,500 comes to 42,700 is the total what payable? Tax payable. Under the what? Come on, man. I'm calculating the tax payable here. 42,700. Have you all got 42,700? On that, you are supposed to add health and education cess of 4%. You will be getting that. Total tax payable will be 44,408. Since the last number is plus 5, you have to round off to 44,410. Sir, you just tell me one thing. Have the total income of this guy exceeds 5 lakh? Yes, sir. No rebate under 87A. Have the total income exceed 50 lakh? No, sir. No surcharge. Are you all really with me? So if this guy is traveling through the default tax regime, the tax liability for this guy will be 78,780. But if this guy is traveling through the optional tax regime, the tax liability for this guy will be 44,410. You tell me as a chartered accountant which route you will refer. Sir, since the tax liability as per the normal provisions of the Act, that is optional tax regime, is lower than the tax liability under the default tax regime under 115 BAC, it would be beneficial for Mr. A to shift out of the default tax regime under 115 BAC for assessment year 26-27. Please don't travel through default tax regime. Please travel through the optional tax regime because your tax liability under the optional tax regime is less. Good question. In the sense means, in one question, they have tested income from salary. One question, they have tested income from house property. One question, they have tested optional tax regime. One question, they have tested default tax regime. Sir, are you able to appreciate what is happening inside this man? I'm moving into question number 2. That's it. This note is there. We can read it. In this case, Mr. A is entitled to exemption under what? 1013A, benefit of interest on housing loan in respect of self-occupied property and chapter 6A reduction, owing to which his total income is reduced by 6,54,000. Because he is entitled to claim chapter 6A, it will pull down the total income. He is entitled to claim 24B, 2 lakh rupees, it pulls down total income. So as compared to the total income under the default tax regime, under optional tax regime, surely total income will be less. By how much rupees? 6,54,000. Hence, in this case, it is beneficial for Mr. A to shift out of the default tax regime under 115 BAC. We have finalized. Are you able to appreciate? I'm moving into question number 2. Mr. Kadam is entitled to a salary of 41,000 per month. Again, salary question. So 41,000 into 12 will be the yearly salary. Am I right? So 41,000 into 12. Whatever it may be, the figure we will write. He is given an option by the employer either to take HRA or to take RFA. Super. So this is HRA versus RFA, my dear lovable students, which is owned by the company. Employer said that, either I will give you HRA da, and you take house by paying rent, or I will provide you RFA, I itself will give you, sir, house. What you want? HRA amount payable was how much per month? As an employer, I will give you 7,000 per month as HRA. The rent for the hired accommodation was 6,000 per month at what? New Delhi. If you are going for rent, house rent allowance, sir, you are liable to pay 6,000 rupees. advise Mr. Kadam whether it would be beneficial for him to avail HRA or RFA. Adada. Till now the fight is OTR, DTR. Here the fight is HRA, RFA. Give your advice on the basis of net take sir home cash benefit. That means you have to take the decision based upon cash flow statement we are supposed to prepare as per AS3. Assume Mr. Kadam exercise the option to shift out of the default tax regime under 115 BSE. Kandipa. Because if he travel through the optional tax regime only, he is entitled to claim exemption under 1013A. Otherwise, he is not entitled to claim 1013A. Am I right, sir? So, I am calculating the tax liability of Kadam under both the options. Option means not OTR versus DTR. Option means what? HRA versus RFA. Are you all really with me? So, my dear lovable students, basic salary, which is 41,000 into 12 months, sir, 4,92,000, whether you are getting HRA or whether you are getting RFA, 4,92,000 will be the basic salary. Am I right, sir? Perquisite, sir, value of RFA. Sir, if he get RFA, he won't get HRA. If he is getting HRA, he won't, sir, if he is getting HRA, he won't get RFA. Because either of the option will be there. You tell me, employer said that either I will give you house to you, Kanna. If employer gives house to the employee, then, my dear lovable students, you have to value the perquisite. Sir, he is given an option by his employer either to take house, HRA, or what? RFA, which is owned by the company. That's a highlight. If the accommodation is owned by the company, it is based upon population. You tell me New Delhi, more than 40 lakhs. Then 10% of salary will be treated as the value of perquisite. So the salary comes to 4,92,000. So 4,92,000 into 10% comes to 49,200 is the value of the RFA. That means he got house from the employer. Now he don't need to take a house for rent. No need to pay the rent. Nothing is supposed to be done. Appreciate Pandriya. Sir, now taxable HRA. What is taxable HRA? We have to calculate. Sir, what is the HRA? Employer said that he is ready to pay. My dear lovable students, HRA, sir, the employer said that every month I am ready to pay you 7,000. So 7,000 into 12. That's what the actual HRA received. Least of the three will be exempted under section 10, subsection 13A under the optional tax regime. Am I right? Which is rent paid in excess of 10% of salary. So I have to go and calculate the salary. What is the salary? 4,92,000 is the salary. So 4,92,000 into 10% comes to 49,200. Am I right, sir? Sir, 49,200 will not be considered as rent paid by the employee. What is the monthly rent? 6,000. So 6,000 into 12 comes to 72,000. Actually, employee paid 72,000. Income Tax Act is saying that out of this 72,000, we will not consider 49,200. So 72,000 minus 49,200 comes to 800 is the rent paid in excess of 10% of salary. Am I right, sir? Actual HRA received same 84,000. Sir, 50% of basic salary. What is the basic salary? 4,92,000 into 50% comes to 2,46,000. You tell me what is the least? 22,800. Am I right, sir? So from 84,000, 22,800 is exempted under section 1013A. 61,200 will be the taxable. That's what 61,200. This amount will be taxable if employee is opting that I don't want RFA, I want only HRA. If RFA is there, HRA won't be there. If HRA is there, RFA won't be there. So your gross salary will be, you have to add 4,92,000 and 61,200. And 4,92,000 plus 49,200. Are you able to appreciate? Less standard deduction. Sir, there is no doubt. There is no fight between standard deduction here. This is not a question of OTR versus DTR. This is a question of HRA versus RFA. So in order to claim HRA, assessee should travel through optional tax regime. I hate you, da. You are not entitled to get 75,000. You will get only. So the net salary will be 5,03,200 and 4,91,200. In question, they have not given any information regarding the chapter 6A. Because of that reason, no chapter 6A will be available, my dear lovable students. Because if you are traveling through optional tax regime, you are entitled to claim Chapter 6A deduction. So the total income will be 5,03,200 and 4,91,200. Pakka? Now I am going to calculate the tax for this 5,03,200. What is the age of this guy? Mr. Kadam, nothing has been given in the question. Below 60 we can assume. That to optional tax regime. You all know that up to 2.5 lakh rupees nil. 2.5 lakhs to 5 lakh, 12,500. More than 5 lakh na 3,200. Am I right, sir? For that 3,200, 20% is the tax payable. Comes to 640. So 12,500 plus 640 comes to 13,140. Have the total income exceeds 5 lakh. Because 5 lakhs is the cutoff rate under the optional tax regime. He is not entitled to claim 87A rebate. Am I right, sir? So subtotal is 13,140. On that 13,140, my dear lovable students, 4% is a health and education cess. Total tax liability will be 13,666. It will be round off to 13,670 because the last number is more than 5. Any problem? Whereas if he is saying that, sir, I don't want HRA, please give me RFA, his total income itself is 4,91,200, which is less than 5 lakh. 100% of the tax liability, whatever you are calculating, can we claim it as, sir, rebate under 87A? Because under 87A, either 12,500 or tax payable, whichever is lower, can we claim it as rebate under 87A? Am I right, sir? What is the tax payable? 4,91,200. Sir, in 4,91,200, 2,50,000, no tax. For the 2,41,200, 5% is the tax liability. So 12,060 is the tax payable. Entire 12,060, can we claim it as a rebate under 87A? So no tax payable, so no health and education, nothing will be there. So it's better to choose HRA route, RFA route rather than HRA route. But decision should not be taken based on that. Question specifically said that take the decision based on the cash flow statement. Am I right, sir? So if you are an employee, you will be getting monthly salary. Sir, your monthly salary will be 5,76,000 if you are traveling through HRA. 5,76,000. What route, man? HRA. Why, sir? 5,76,000 HRA. Sir, how much is the monthly salary? How much is the monthly salary? 41,000 rupees is the monthly salary. Am I right, sir? 41,000 into 12 comes to 4,92,000. So by that way, you will be getting 4,92,000. Plus, if you are traveling through HRA, what is the monthly HRA? 7,000. So 7,000 into 12 comes to 84,000. So you tell me 4,92,000 plus 84,000 comes to. That's how 5,76,000. Cash received, yeah. Salary will be received in cash, HRA will be received in cash. Whereas if it is RFA, only basic salary will be received. 4,92,000 only will be received. Any problem? If it is HRA route, employer will give HRA to the employee and employee should pay rent to the tenant or the landlord. Am I right? What is the rent per month? 6,000. So 6,000 into 12, 72,000. So 6,000 into 12 will be cash inflow or cash outflow. Cash outflow, 72,000 will go out. Am I right, sir? And if the assessee is traveling through the HRA route, in addition to that, he is liable to pay 13,670 as tax. Tax payment, again a cash outflow, in the sense means the balance money available in the pocket of the employee is 4,90,330. If it is what route? HRA route. Whereas if he is traveling through RFA route, the balance money available with the employee will be 4,92,000. At tax payable also zero, yeah. Even he is having extra cash since the net cash inflow under option 2, that is what? RFA is higher than option number 1, that is HRA. It is beneficial for Mr. Kadam to avail option number 2, sir, rent-free accommodation. Ask your employer to provide RFA. Say that you don't want HRA. You don't take the, sir, place for rent. You don't pay rent for building. Are you able to appreciate? What a beautiful question, man. Question number 2. Can we come to question number 3? I'm coming to question number 3. The last question in this slot. What is the use of doing these questions? The entire subject will get revised. Many things will be recalled. We will understand many things. Oh, the application of the subject. You do this. To do this question, you need a pakka, sir, residential status knowledge is required. Miss Charlie, an American national, Vechambarap, American national, got married to Mr. Radhe of India. In USA, on 2/3/2025, that means in 2024-25, he got married and came to India for the first time on 16/3. That means, sir, last year they visited India on 16/3. So 16/3 means 16. From 16 till 31st of March of the last year, they were in India. You tell me how many days they were in India? 15, huh? 16, 17, 18, 19, 20. Plus 31, na 11 days. So 11 plus 5, na 16 days. They was in India, wa? Including 16. 16 they came means they are in India. Have they touched their feet in India on 16? Yes, then they are in India only. Hello, sir? Right. She left for USA on 19/9/2025. In our year, she has left India. Please, pa, kalambu pa. 19/9. That means from 1st of April till 19th of September, she was in India only. She returned to India again on 27/3/2026. Super. That means easier. April, May, June, July, August, September. You tell me, April, 30 days. May, 31 days. June, 30 days. July, 31. August, September, when she left. Even 19, it will be included in India. Because 19, her feet was in India. Then only she has left. Sir, 30 plus 31 plus 30 plus 31 plus 31 plus 19 comes to 172 days in slot number 1. Not only this, she came back on 27th. So 27, 28, 29, 30, 31. That means again 5 more days she was in India. So 172 plus 5. 170. Ayoda. Sir, she was in India for less than 182 days. That means basic condition number 1 has not been satisfied. Basic condition number 1 has not been satisfied. There is a huge chance for basic condition number 2. Sir, in India, sir, whether she was in India for 60 days? Yes. Not only that. See back for the last immediately 4 preceding previous years. Only 17 or 16 days was there in India, 16 days, which is less than 365 days. That means second basic condition also not satisfied. This guy is a for our previous year. Super. While in India, she had purchased a showroom in Mumbai. Is a Mumbai situated in India? That means from that showroom, any income arises, income has been accrued or risen in India. That means that income is an Indian income. In the hands of non-resident, Indian income will be taxable on 30/4/2025, which was leased out to a company on a rent of 25,000 per month. So 25,000 into 12 will be the rental income, which will be taxable under IFHP. From 1/5/2025, don't put for 12 months because it is only for 11 months. Are you all ready with me? She had taken a loan from bank for purchase of this showroom, on which bank has charged interest of 97,500 up to 31/3/2026. She has received the following cash gift. So they are testing IFOS provisions also from her relatives and friends. During 1/4/2025 to 31/3/2026. From parents of the husband. Sir, husband's parents are relative. IFOS will not be applicable. From married sister of the husband. Whether married sister of the husband. Husband's sister. Married, unmarried is not matter. Is relative? Yes, sir. Hence, this will also not be taxable. From very close friend of her husband. Rupees 1,51,000 and 21,000. Total 1,72,000. Since it exceeds 50,000, it will be what, man? Taxable. Sir, taxable in India. This is an Indian income because gift has been accrued or arisen in required. Determine a residential status. Okay. Compute the total income. Okay. Chargeable to tax along with the amount of tax liability. Okay. On such income for the assessment year 26-27, if she, sir, opt out of the default tax regime, that means she is traveling through the optional tax regime. Can we calculate? we have to vomit the entire chapter residential status as per 6 subsection 1 and individually said to be resident in India in any previous year if he or she satisfy any of the following condition. Array, out of basic condition, only one condition need to be satisfied. He or she has been in India during the previous year for a total period of 180 days or more. He or she has been in India during the 4 immediately preceding previous year for a total period of 365 days or more and has been in India for at least 60 days or more in the previous year. Sir, if an individual satisfy any one of the condition mentioned above, any one, he or she is a, if both the above conditions are not satisfied, individual is a, therefore, the residential status of Miss Charlie, an American national, for assessment year 26-27 has to be determined on the basis of her stay in India during 25-26 and in the preceding 4 previous years. Her stay in India during our year, from 1st of April onwards, she was in India only. She left India on which date? On which date she has left? This question, yes. 99. 99 she left means her leg was in India on 19th. That will be included. How many days? 172 days. 172 days. Super. Sir, then again she came back on 27th. So her leg touched India on 27th. So kal papananga. So from 27 to 31st, 5 days. Total 177 days she was in India, which was less than 182 days. Okay, fine. So basic condition number 1 will not be satisfied or has not been satisfied. I have to depend upon basic condition number 2. Since this guy is an American national, exception to second basic condition will not be applicable. Only if an Indian citizen leaving India, Indian citizen leaving India, Indian citizen visiting India, Indian citizen visiting India. That's why up American national. Then, my dear lovable students, sir, second basic condition will be applicable. As per second basic condition, during the previous year, you should be in India for at least a period of 60 days. Happily, she was in India for 60 days. And in the 4 immediately preceding previous years, she should be in India for 365 days. She is in India only for 16 days, my dear lovable students. Only 16 days she is in India. 16. Am I right, sir? That means out of 365 days, if she is in India only for 16 days, she has not even satisfied the second basic condition. So this is the conclusion. Total stay of the assessee during the previous year in India was less than. During the 4 preceding previous years, it was just 4. Therefore, due to non-fulfillment of any of the 2 conditions for a resident, any one condition has to be satisfied. She should be treated as a non-resident. Now, we are going to calculate the scope of total income for a non-resident. Sir, there is no income from salary. There is no salary has been received from India. Income from house property, yes sir, she is having some property, she has purchased some property, am I right sir? And that property has been let out for a rent of 25,000. Is the property situated in India? Then it's an Indian income. Indian income will be taxable irrespective of the residential status. But it has been let out only for 11 months. So 25,000 to 11, 2,75,000. No information has been provided regarding LT bar MT. So you will be getting NAV of 2,75,000. Am I right, sir? On that 2,75,000, 30% reduction can be claimed. And IOBC can be claimed as a reduction. 97,500 is the IOBC. IFHP will be 95,000. That's what income from house property, 95,000. There is no PGP information given in the question. There is no capital gain information given in the question. But there is IFIS information given in the question. You tell me cash gift receipt from relative is chargeable under 56 subsection to class 10. Am I right, sir? If the aggregate value exceeds how much? 50,000. Since this is from relatives, 56 subsection to class 10 will not be applicable. 50,000 receipt from parents of husband would be what? Exempt. Exempt. Because this is from relative. 11,000 receipt from married sister of the husband is exempt since sister-in-law falls with the definition of relatives. Whereas gift received from 2 friends of husband, sir, 1,51,000 and 21,000, aggregating to 1,72,000, which is more than 50,000. So this 1,72,000 should be taxable under the head. So the gross total income of Charlie is 2,67,000. 2,67,000. There is no chapter 6 deduction given in the question. What is the taxable income? 2,67,000. My dear lovable students, which route? Optional tax regime or default tax regime? Optional tax regime. Have the question said that? Optional tax regime. Look, determine residential status and compute the total income. We have done it. Chargeable to tax along with the amount of tax liability on such income. For assessment year 26-27, if she opt out of the default tax regime, that means assessee is traveling through the optional tax regime. Under optional tax regime, up to 2.5 lakh rupees nil. Since the assessee is a non-resident, age benefit will not be available. Because assessee's residential status is what resident? Non-resident. So my dear lovable students, up to 2.5 lakh rupees nil. So 2,67,000 minus 2,50,000 na only 17,000 rupees is the tax liability. Into how much percent? 5% comes to 850. Can a non-resident enjoy 87A rebate? No. 87A. What is the code word I said? Assessee should be a resident. Assessee should be an individual. Then the government will give you trip. Are you agree with me? If your total income is less than 5 lakh. Am I right? Perquisite. Government perquisite. Trip is the code word. Sir, assessee should be a resident. Since assessee is a non-resident, they are not entitled to claim 87A rebate. On this 4% tax liability, 884, which will be round off to 880. Any problem? First part of the question comes to an end. Second part, one more part is there with the question. Would her residential status undergo any change? Assuming that she is a person of Indian origin. Person of Indian origin. If an Indian citizen or person of Indian origin who are visiting India, we will classify them as chota wala, bada wala. For chota wala, second basic condition will not be applicable. Only first basic condition will be applicable. For bada wala, altered second basic condition will be applicable. And total income from Indian source is 18 lakh. More than 15 lakh. She is a what wala? Bada wala. And she is not liable to tax in USA. That is another condition. Am I right, sir? So, my dear lovable students, for her, second basic condition will not be applicable. Altered second basic condition will be applicable. What altered second basic condition is saying that she should be in India for at least 120 days. Yes, she is in India for 177 days. Not only current year. You have to see the 4 immediately preceding previous year. 365 days she should be in India. Illaye. That means she has not satisfied alternate second basic condition. Because of that reason, she will be called as what resident? Non-resident. Now, I will be checking whether she can a deemed resident or not. As per section 6 subsection 1A. Am I right, sir? Sir, deemed resident 6 subsection 1A, the assessee should be an individual. Yes, she is an individual. And she should be a citizen of India. Is this guy citizen of India or person of Indian origin? Person of Indian origin. Am I right, sir? By keeping that in mind, you have to read the second one. A residential status of Charlie in case she is a person of Indian origin and total income exceeds 18 lakh. That is 15 lakh. Correct? If she is a person of Indian origin and her total income from Indian source exceeds 15 lakh, that is 18 lakh in her case. Condition of stay in India for a period exceed how much? 120 days during the previous year and 365 days during the 4 immediately preceding previous year would be applicable to treat it as a resident. Since her stay in India exceeds how much days? 120 days, but the period of her stay in the 4 immediately preceding previous year is only how many days? In place of 365 days. So she should be treated as a what resident? Non-resident. Further, since she is not a citizen of India, I already said 6 subsection 1A, she should be an Ajit fan. Citizen. Am I right, sir? Since she is not a citizen of India, provisions of 6.1A deeming an individual to be citizen of India would not get attracted in her case because she is a person of Indian origin, not citizen of India. Even though she is a person of Indian origin and her total income from Indian source exceed 15 lakh, she is not liable to pay tax in USA. Even though all these, she will be treated as what resident? Are you able to appreciate salary, house property, and residential status, computation of total income, optional tax regime, default tax regime? My dear lovable students, we may talk for last 1 hour, but look at the intensity what we are talking for last 1 hour. How many provisions we are connecting, how many things we are recalling, my dear lovable students, how many dots you are able to connect matters a lot. I will be doing sufficient number of questions for you to make you comfortable in the computation of total income. Don't worry at all. Before I do, I request each and everyone who are listening to this lecture, every one of you should do question number 1, question number 2, question number 3 by your own. You will be committing a lot of mistake. Don't worry. Take all those mistakes as your lessons. Then only really you are understanding what tax is all about. And come back to me. I will be solving question number 4, my dear lovable students. A very important P&L question. This is an expected question like this you will be getting in examination. Are you all really with me? Then we'll be doing a very small question. Nothing is there. Book back question. Very, very small question. Sir, that 2 question we'll be doing in the next slot. Because again, we'll be having a P&L account. Big question. Because when you take a break and when you do this P&L, you will be getting a further grip. Are you all comfortable? So just start doing 1, 2, 3 and come back. Sir, very, very, very happy evening to all. So we are doing the first 15 mark computation of total income, my dear lovable students. In the last lecture, we have solved question number 1, question number 2 and question number 3 of the ICI illustrations and book back. In this slot, we are going to do question number 4, 5 and 6. Dr. Niranjana, a resident individual. Super, sir. Always note what is the residential status of the assessee. They themselves calculated residential status and the assessee is a resident. Aged 60 years. If the assessee is going to travel through the optional tax regime, age matters. Whereas if the assessee is going to travel through the default tax regime, age does not matter. He is running a clinic. Her income and expenditure account for the year ended 31st March 2026 is as under. This is what the income and expenditure account. My dear lovable students, this is the net profit given. Sir, always we have to start the PGBP with the net profit. And we have to eliminate the impurities from the P&L account. The impurities in the sense means sometimes the other head of income like salary, like house property, like capital gain, like IFOS would have been credited and debited to the P&L account. For example, my dear lovable students, by consultation and medical charges, it's a PGBP income. It has to be credited in the P&L account. It has been pakka credited in the P&L account. So if you credit anything in the P&L account, net profit will increase. Let it increase, no problem at all. By income tax refund, my dear lovable students, because of crediting 5450 in the P&L account, your net profit will increase by 5450. But this income tax refund is not at all an income. It is not at all an income. Because I am paying advance tax. We have already discussed the provisions of advance tax. We have to pay advance tax in 4 installments. 15%, 45%, 75%, 100%. My dear lovable students, if the amount of advance tax, TDS and TCS is higher, as compared to the tax what we are liable to be paid, government will refund that money. That extra, that amount is neither income nor expenses. So this amount should not be credited to what account? P&L account. So because of crediting this 5450, we are supposed to reduce it from net profit 5450. But principal is 5,000. Interest is what? 450. As per IFOS, if you are getting interest on income tax, should be taxable under the head income from other sources. That means this 450 should be included in the IFOS. From PGBP, you have to eliminate 5450. In IFOS, you have to include 450. Dividend from units of UTI. As we all know that always dividend should be taxable under IFOS. Since it has been credited to P&L account, net profit would have been reduced. Should not reduce. Reduce it from PGBP and shown it under the head IFOS. Winning from game on TV. It's a casual income, my dear lovable students. Because of crediting 35,000, our PGBP income would have been increased, should be reduced from the PGBP. And this 35,000 should be shown it under IFOS. But question is saying that this is net of TDS. As we all know that. 194B Bhagya, 194BB Bada Bhagya, 194 Ba winning from online games. They will be deducting TDS at the rate of 30%. We already discussed in the TDS chapter that grossing up concept has to be done. So if this 35,000 rupees is after TDS, this will be 70%. Am I right, sir? So the gross income before TDS will be 50,000. But how much only credited to P&L? 35,000. So net profit would have been increased by only 35,000. So we should remove only 35,000 from the PGBP. But under the head IFOS, you should include 50,000. And finally, after you calculated the tax payable, this 15,000, which is 50,000 minus 35,000, 15,000 can be claimed as credit, because whatever TDS has been deducted can be claimed as credit. By rent, this is an IFHP income, my dear lovable students. Because of crediting this rent to the P&L account, net profit would have been increased. Should not be increased. Should not be increased. Should be reduced. And should declare it as an income under the head IFOS. Since this is rent received, don't ask a question that self-occupied or let out. Only for let out property, you will get the rent. Super fantastic. Do the analysis of the expenses side. Medicine consumed. Is medicine and hospital are related? Yes, sir. Allowed. Staff salary. In order to run a clinic, do you have to pay staff salary? Allowed. Clinical consumables. Is it allowed? Yes, sir. Rent paid. Is it allowed? To administrative expenses. Is it allowed? Amount paid to scientific research. Section 35. As we all know that, Section 35, you will be incurring two expenditure. In-house research and contribution to outsiders. In-house research will be allowed it as a deduction, both under the optional tax regime and the default tax regime. Whereas, contribution to outsiders will be allowed as deduction only under the optional tax regime. That means in this question, if the assessee is traveling through the default tax regime that I don't know, then this amount should not be debited to P&L account, should be back. But if the assessee is traveling through the optional tax regime, no problem at all, no adjustment is required. Are you all really with me? I will be starting with 4,40,400. This 4,40,400 contains impurity. In the sense means other heads of income has been credited to P&L. Unnecessary expense may be debited to P&L. I have to eliminate all the impurity. That purified net profit is called as PGBP. Able to appreciate? Now they are talking about one by one. Rent paid. They are talking about these details, my dear lovable students. This one, rent paid, includes 30,000 paid by check towards rent for her residential house in Surat. This is personal expenditure. Can personal expenditure debited to P&L? No, sir. So out of this 90,000, only 60,000 is related to business expenditure. Whereas 30,000 is personal expenditure. This 30,000 should be back. Because that 30,000 should not have been debited to P&L. Because of debiting that 30,000, my net profit would have been reduced. My net profit should not reduce. It's an impurity for PGBP. Should be back, added back. Clinic equipments. My dear lovable students, clinic equipments are capital expenditure. For clinic equipments, you are not entitled to debit to the P&L account. But for clinic equipment, you are entitled to claim depreciation. That to normal depreciation, no additional depreciation. Because additional depreciation will be available only under the optional tax regime. That too if an assessee who is engaged in the production or manufacture of any article or thing or generation or distribution of power. Am I right, sir? 1/4/2025 opening WDV 5 lakh. That means this asset has been there for more than 180 days. We are following 180 days. Am I right, sir? So my dear lovable students, look at here, man. Sir, don't get confused. Okay. You are having two concepts. One is residential status and other is depreciation. Am I right, sir? Sir, 365 days are there in a year. Divided by 2 comes to 182.5. This 0.5 we put it on dustbin. My dear lovable students, if an assessee is there in a previous year equal to or more than 182 days, that guy will be treated as the resident. Am I right, sir? But this is what? Depreciation. We will not consider 182 because this is 32. From that 2 will be reduced. Okay. Because this is 32. We will be following 180 days concept. Come on. So my dear lovable students, since the asset has been put to use for more than 180 days, The assessee is entitled to claim full rate of depreciation. For equipment, 15% is the rate of depreciation. So 5 lakh into 15% comes to 75,000. Am I right, sir? Actually, this 75,000 should have been debited to P&L, but it has not been debited to P&L. If it has been debited to P&L, net profit would have been come down. So we have to reduce when we are calculating the PGBP. Easy. On 7/12/2025, you tell me from 7/12 till 31st of March, only, sir, December, January, February, March, more than 180 days, less than 180 days. So for this 2 lakh asset, you are entitled to claim only 7.5%. They are specifically saying that this asset has been acquired by check. In the sense means 40A subsection 3 provisions will not be applicable in a single day to a single person. If the cash payment exceeding 10,000 or 35,000 as the, and 35,000 concept will not be applicable for asset. Am I right, sir? 10,000 concept will only be applicable. Since it has been paid by check, 2 lakh into 7.5% comes to 15,000 can be claimed as depreciation. So 75 plus 15, 90,000 is the total depreciation we are supposed to be reduced from the net profit. Able to appreciate? Rent received. Yes, we have received the rent. That rent only credited to P&L. How much? 27,000. Relates to property situated in Surat. That property situated in Surat. GAV is 27,000. That means they themselves calculated fair rent or municipal value, whichever is higher, or standard rent, whichever is lower. That answer is called as expected rent. Expected rent or actual rent received or receivable, whichever is higher. All those steps and all they have calculated, they finalized 27,000. The municipal tax of 2,000 paid in December 2025, our financial year, has been included in the administrative expenses. Tavarana sale. So that 2,000 is there in the administrative expenses. That means that 2,000 is an impurity to the PGBP. Should not be debited to what account? P&L account. Because of debiting this 2,000 to P&L, net profit would have come down. Should be in the back. And this 2,000 has to be claimed as a deduction under the head IFHP because GAV less LT bar MT paid by the owner. Able to appreciate, sir. She received salary of 7,500 per month. Salary should be taxable under income from salary. From full cure hospital, that means this doctor is having her own clinic and she is going and working with another clinic also. For example, if a doctor is working in Apollo, he will be working in Apollo from 10 to 5. After evening, he will be having private clinic. Sir, if anyone want to come and see, they can go and come and see. Which has not been included in the consultation and medical charges. In the sense means, in this 58,85,850, this salary income is not there. If it is there, we would have removed from the PGBP and we would have declared under income from salary. Since it is not there, no need to remove from the PGBP, just declare under income from salary. Don't forget to reduce standard deduction. If the employee is traveling through the default tax regime, I love you da 75,000. If you are traveling through optional tax regime, I hate you da 50,000. Don't reduce the standard deduction. Dr. Niranjana availed a loan of 5,50,000 from a bank for higher education of her daughter. Sir, they are talking about interest on higher education, 80E. 80? This is principal. For principal, you can't claim deduction. She repaid principal of 1 lakh. Put it on dustbin. And interest there on 55,000 during our financial year, sir, 25-26. My dear lovable students, if she travel through optional tax regime, this can be claimed as deduction under 80E. If she travel through default tax regime, there is no chapter 6A deduction at all. This point has to be put it on dustbin. She paid 1 lakh as tuition fee, 80C, not in the nature of development fee or donation to University of full-time education of her daughter. She is entitled to claim 80C if she is traveling through the optional tax regime. If she is traveling through default tax regime, sir, this cannot be claimed as deduction at all. Amount of 28,000 has been paid by check on 27th March 2026 for her medical insurance premium. What was her age? 60. Niranjana. 60. Hello, sir. Pair matunda modern party. My dear lovable students, sir, since the assessee is a senior citizen, the slab is 50,000. You can claim entire 28,000 under 80D if she is traveling through the optional tax. But if she is traveling through default tax regime, point number 5, 6, 7, put it on dustbin because there is no question of chapter 6. From the above, compute the total income of Dr. Niranjana for assessment year 26-27, assuming she has not opted to pay tax under section 115 BAC. Not opted. Not opted means optional tax regime. Sir, she has not, I'm cutting, it is wrong, opted to pay tax under 115 BAC because answer is there in the default tax regime. Hello, sir. Actually, that not is not there. Okay. It's a printing mistake. Right, sir. So we have to suppose to calculate only as per the default tax regime. Only one way we have to think. Computation of total income of Dr. Niranjana for assessment year 26-27 under default tax regime. Number one is income from salary. Income from? Yes, she is having salary. She is working somewhere. What is a monthly salary? 7,500 into 12. 90,000 is the gross salary. In which route she is traveling? Default tax regime. Love you da, hate you da. Love you da, 75,000 will be the standard deduction. Balance will be income from salary, 15,000. Any problem to anyone? Number two, income from house property, my dear lovable students. Income from house property. Sir, she is having any house property income? Yes. She is having GAV of 27,000. Less LT bar MT paid by the owner. Have that 2,000 has been paid? Yes. Have it has been paid by owner? Yes. But this has been debited to P&L account. Should be NA back. In PGB. And this 2,000 can be claimed as deduction. So the net annual value will be 25,000. On this 25,000, you can claim 30% of net annual value, which come to 7,500. There is no IOBC. Sir, information has been given in the question. Sir, since no IOBC has been given, I will not claim. So my IFHP will be 17,500. Any problem? The hero, PGBP, profits and gains of business or profession, income from profession. Net profit as per income and expenditure account, 4,40,400, which is the net profit given in the question. Am I right, sir? Sir, this 4,40,400 contains impurity. I am going to remove the impurity one by one. The first impurity, less items of income to be treated separately. Sir, rent received should be taxable under IFHP. This we have to remove from PGBP. Already we have taxed this 27,000. Just now we taxed tonight. Dividend from units of UTI. Sir, this is a IFOS income. So should be removed from PGBP. And this 10,500 immediately should be included in the IFOS, my dear lovable students. Immediately. Otherwise you will forget. Otherwise it's a double time job. Paka? Sir, winning from game show on TV net of TDS. How much credited to P&L? 35,000. So 35,000 you remove from PGBP, but under the head IFOS 35,000 plus 15,000 TDS. Please include 50,000, my dear lovable students. Able to appreciate? Sir, income tax refund. How much money has been credited to P&L? 5,450. 5,450 should be reduced from PGBP, but only 450 should be included under IFOS. Look, at the same time, we are ready with IFOS. That's how you have to do the working, my dear lovable students. That's it, man. You will be getting subtotal. That means this should be the ideal net profit. That means if you eliminate the impurity from the other heads, you will be getting the PGBP net profit. This should have been the ideal net profit. Now, less allowable expenditure. Actually, on the debit side of the P&L, we should have debited depreciation. Have we debited? No. So, depreciation on clinical equipment. 5 lakh at the rate of how much percent? 15%. Because it has been put to use for more than 180 days. 2 lakh at the rate of 7.5%. Because it has been put to use for less than 75,000 and 15,000. So, the ideal PGBP should be 2,72,450. Am I right, sir? Now, I am checking one by one of the P&L account. You tell me, amount paid to scientific research. Sir, this is contribution to outsiders. Contribution to outsiders are not related to business. Since it is not related to business, it won't be allowed it as a deduction under the default tax regime. That means that amount should not have been debited to P&L account. Because of debiting that amount in P&L account should be back. So 1,50,000 should be added back. Able to appreciate. Rent for a residential accommodation. That is a personal expenditure, yeah. Personal expenditure should not be debited to P&L account. That 30,000 should be back. Municipal taxes paid relating to residential house at Surat. This is a IFHP deduction, not a PGBP deduction. Since it has been debited to P&L account, this 2,000 should be back. Added back. And we have to claim this 2,000 in the IFHP that we already claimed. Comfortable? You will be getting income from profession of 4,54,450. That's what 4,54,450. Easy. There is no capital gain information. Already we finalized the IFOS parallelly 68,950. That note you can attach here 60,950, my dear lovable students. So you will be getting what total income? Gross total income. In which route you are traveling? Under default tax regime, there is no question of chapter 6A at all. Put a dash. Actually, she was entitled to claim, my dear lovable students, 80C not allowed, 80D not allowed, 80E not allowed. Only 80CCH subsection 2, 80CCD subsection 2, 80JJ, AA. Only these three sections are allowed under the default tax regime. Since SSC is traveling through default tax regime, my dear lovable students, sir, this won't be allowed it as a deduction. The taxable income is 5,47,900. What they want from the above, compute the total income. We calculated the total income of daughter Niranjana for assessment year 26-27, assuming she has opted to pay tax under 115 BAC. That means she is going through the default tax regime. That's it with regard to the answer. Sir, this notes and all I already said when I am explaining. Are you feeling comfortable with regard to question number 4 of computation of total income? I'm moving into a very basic question, my dear lovable students, which is a surcharge and the marginal relief question. Already we have done in the basics. You would have forgot. I have to, sir, recall. It's my basic responsibility. Compute the tax liability of Mr. Gupta, aged 61, under the default tax regime. Under default tax regime, we won't respect the age. Having total income of 1,150,000. That means if your total income is up to 50 lakh, there is no surcharge. More than 50 lakh, up to 1 crore, 10% surcharge. More than 1 crore, up to 2 crore, 15% surcharge. Because of the reason that I have earned extra 1,50,000, my surcharge will be anyayama from 10%, it will become 15%. Sir, for assessment year 25-26, assume that his total income comprised of salary income, income from house property and interest on FD. That means he does not have any special income. We are having only normal income. Can we do the solution? Sir, I have to calculate the tax liability. Nothing. 1 crore 1,50,000. We are having two approach. Total approach, exclusion approach. Total approach means 1 crore 1,50,000 should be classified into two categories. What tax regime? Up to 24 lakh, we know that 3 lakh rupees is a tax liability. Am I right? So, my dear lovable students, so 1 crore 1,50,000 minus 24 lakhs means 77,50,000 over and above 24 lakh. For this 77,50,000 into how much percent? 30%. So 23,25,000 plus how much lakh? So 3 lakh plus 23,25,000 comes to 26,25,000 is the total tax payable. 26,25,000. This is total approach. In the sense means I am even considering this 1 crore 1,50,000. Even this 1,50,000 also as my income. Also as my. Since my total income exceeds 1 crore, I am liable to pay surcharge at the rate of. That means 26,25,000 into 15%. Calculator. 3,93,750. So if you are feeling it as total approach, then 30 lakh 18,750 is the total tax payable without marginal relief. Am I right, sir? Now, my dear lovable students, because of extra earning 1,50,000, my surcharge slab is moving from 10% to 15%. I am ready to declare the entire extra 1,50,000. Pakka. So I will be calculating tax liability only for 1 crore. So 100 lakh should be classified into two categories. 24 lakhs and 76 lakhs. This 76 lakhs into 30%. So 76 lakhs into 30% comes to 22 lakh 80,000. And this 24 lakh fixed amount of 3 lakh. So 3 lakh plus 22 lakh 80,000 comes to 25 lakh 80,000. That means if you are calculating the total income as only 1 crore, 25 lakh 80,000. Since the total income does not exceed 1 crore, surcharge percent will be first slab of 10%. So 25 lakh 80,000 into 10% comes to 2 lakh 58,000. So the subtotal is 28 lakh 38,000. Am I right? Not only this, you have calculated now tax liability only for 1 crore. How much extra income you want? You gift that extra to the government. That's what at 1,50,000. Then the total tax payable of rupees 1 crore plus the excess of total over 1 crore is 28 lakh 38,000 plus 1,50,000 comes to 29 lakh 88,000. Now assessee is thinking that if I am treating that 1,50,000 as my income, my tax payable is 30 lakh 18,750. 30 lakh 18,750. But if I am doing like this to government, I am ready to gift you 1,50,000. Then my tax liability is only 29 lakh 88,000. So because of treating that 1,50,000 as an income, the extra tax I am liable to be paid is 30,750. That 30,750 can be taken as marginal relief. Pakka. That means government is saying that you are liable to pay the lower of the two, which is 29 lakh 88,000. On that you are liable to pay health and education cess of 4%. This will be your final tax liability. Comfortable? The same thing we can calculate alternatively. The same thing. In exam, don't do alternatively and all. This is only, sir, again a repetition. In the sense means, sir, you are having 1 crore 1,50,000 rupees. For one, if you calculate tax liability of 1 crore 1,50,000, my dear lovable students, sir, can I calculate? Already we have calculated 26 lakh. Yes, 26 lakh 25,000. Am I right? If you treat that extra 1,50,000 as income, you will be in surcharge slab of 15%. So the total will be 30 lakh 18,750. This answer will not change even in alternative. Hello, sir. But now in alternative, you are thinking that for that 1 crore, I am liable to pay how much, man? Sir, for 1 crore should be classified into two categories. We already calculated. 22 lakh 80,000 plus 3 lakhs comes to 25 lakh 80,000. 25 lakh 80,000 plus 1 lakh 50,000. So how much plus how much? 25 lakh 80,000 plus extra 1 lakh 50,000 now. Sir, tax payable on total income of 1 crore. 1 crore, that is 3 lakh up to 24 lakh plus 22 lakh 80,000 beyond 24 lakhs till 1 crore plus surcharge at 10%. Plus surcharge at a normal tax payable, yeah. 28 lakh 38,000. 28 lakh 38,000. That means if you are calculating tax payable for 1 crore 15 lakh, the tax payable comes to 30 lakh 18,750. But if you are saying that, sir, I don't have the income at all, my income itself is only how much? 1 crore. Then your tax liability is only 28 lakh 38,000. What is the excess tax payable? 1,80,750. Excess tax. This excess tax of 1,80,750 I have to pay, sir, since I earn an extra income of 1,50,000. Income itself is only 150. But the tax payable is, what is the difference? Sir, 180,750 minus 150 comes to 30,000. Look here, this 30,750 can be taken as marginal relief. Only thinking difference are there. I hope that you are able to appreciate. Which method you are feeling comfortable, that method you can proceed. That's what marginal relief of 30,750. Then the tax payable will be this 28 lakh 38,000 plus extra of 1,50,000. You will be getting 29 lakh 88,000. Had health and education cess of 4%, you will get the total tax liability. Both the route, you will get the same amount only, 31 lakh 7,520. And here also, sir, 31 lakh 7,520 is the total tax payable. Look at here, 31 lakh 7,520. Comfortable. Whichever route you are feeling comfortable, you do it. Sir, simple, keep the things, marginal relief. You treat that extra 1,50,000 as income. Then calculate the tax payable for the 1 crore 1,50,000. Add surcharge at 15%. Am I right? You will get the total tax liability. Then now, this approach, in the sense means calculate tax payable for 1 crore plus surcharge of 10% plus offer extra 1,50,000 to government. The difference, you can take it as what relief? Fine. Or alternatively, if you are comfortable, you can do it. We have done a lot of questions. The last question, question number 6, my dear lovable students. Miss Parvi, aged 55 years. Age is important. If it is, what tax regime? Is a chartered accountant in practice. She maintains her accounts on cash basis. Under PGBP, it is allowed. Sir, under salary, due or receipt, whichever is earlier. That means accrual basis. IFHP, sir, expected rent or actual rent received or receivable, whichever is higher. That means accrual basis. PGBP, nothing like that. You can maintain as per cash basis. Her income and expenditure account for the year ended 31st March 2026 read as follows. Income and expenditure account means net profit is there. This net profit will be having impurities. We have to remove the... You tell me she's a chartered accountant. You all are going to become a chartered accountant. Once you become chartered accountant, will you do audit? From that you are getting fees. Is it a business income? Fees earned from taxation services. Whatever tax I am teaching you, you will use that in future and you will be earning income. My dear lovable students, is it a PGBP income? Yes, sir. That means this is purity, not impurity. You are providing consultancy service to our client and you are earning income. Is it a PGBP income? Dividend on shares of Indian company. This should be taxable under the head. Since it has been credited to P&L account, net profit would have been increased. Should not be increased. Should be removed from PGBP and should be included in IFOS simultaneously. Specifically, they said that this is gross. That means this is not after TDS. Otherwise, if company at the time of paying dividend, they are supposed to deduct TDS under 194, 193 interest on security, 194 dividend, 194A interest other than interest on security, 194K income from mutual fund. This should strike. Income from UTI should be taxable under IFOS. This is an impurity for PGBP. Should be removed from PGBP and should be included in honorarium received from various institutions for valuation of answer paper. After you become chartered accountant, are you going to value paper for 15,800 or are you going to earn 27,88,000? 27,88,000. That means this is your business income. This is your IFOS. Income from other sources for Pani Puri. Rent received from residential flat let out. This is a IFHP income. Should be removed from PGBP and should be included in. That's it. That's it. Salary to staff. You tell me, is it an allowable business expenditure? Stipend to article assistant. Tomorrow after you become CA, you need articles, right? At that time, any vacancies there, you inform me, I will come and be your article. You have to pay me stipend. Hello, sir. Incentive to article assistant. If I am working well, you have to give me incentive. Office rent, yes, you are supposed to be paid. Printing and stationery. Meeting, seminar, conference. Purchase of car. You tell me, purchase of car is a personal expenditure or, sir, capital expenditure. Capital expenditure. Depreciation can be claimed for car. Repair, maintenance and petrol of car. If the car has been used for business, petrol expense will be allowed as a reduction. If it has been used for personal purpose, should be in a back. Traveling expenses. Municipal taxes paid in respect of house property. This is an expense relating to IFHP. Since it has been debited to P&L, this is an impurity. Should be back, added back. And can we claim it as a deduction under? That's it. Other information, only 8 informations are there. What they are trying to say? Allowable rate of depreciation for motor car is 15%. Since the cost of the motor car has been debited to P&L account, it should be back. And you can claim depreciation for motor car. That means 80,000 into 15% comes to that we have to reduce it. Am I right, sir? Value of benefits received from client during the course of profession is 10,500. Sir, in the course of business, in the course of profession, if you are getting any gift, that should be taxable under the PGBP. It will not go to IFOS. Sir, section 56 subsection 2 class 10 is applicable to all SSC. If you are receiving gift by cash or by immovable property or by other than immovable property, this is, sir, receipt of benefit received from client. Tomorrow, after you become a chartered accountant, you are saying that ANM is the reason for me becoming a chartered accountant, and if you are offering me an Audi car, because I don't have money to even buy a bicycle. My dear lovable students, then that Audi car should be declared as my PGBP income. Because of my business, because of my profession, only I have received that income. Am I right? Super fantastic to the core. So this 10,500, have it credited to P&L? No. That means since it has not been credited to P&L, it should not have been included in net profit. So we have to add to the net profit manually. Pakka? Incentive to article assistant. Represent. Yes. This guy has paid some incentive to article assistant. Incentives. Amount paid to 2 article assistant for passing IPCC examination at the first attempt. Now CA Inter is there conducting. Earlier IPCC was there. Since the students have cleared the exam in the first attempt like you, auditor has given cash award for him. My dear lovable students, as per section 37, if the expenditure is not covered under 30 to 36, if expenditure is revenue in nature, if expenditure has been wholly and exclusively for the purpose of business or profession, if expenditure is not personal in nature, if expenditure is not capital in nature, if expenditure is not covered under section 135 of the Companies Act 2013, if expenditure is not infraction of law, then that expenditure can be debited to P&L account. Since all the condition has been satisfied, this 13,000 can be debited to P&L account. No adjustment is required. Comfortable? Repair and maintenance of car include 2,000 for the period from 1/10/2025 to 39/2026. Even the next year expense also has been debited to P&L. No problem, since we are following cash basis. Because in next year, expense will not be booked. Automatically next year net profit will be high. We will pay more tax. Are you all really with me? And this is not payable. This is paid. Since it is paid, it is allowed, my dear lovable students. Salary include 30,000 to a computer specialist in cash. In a single day, to a single person, you are not supposed to make the payment in cash in excess of 10,000 or 35,000. That means this entire 30,000 should be back. The traveling expense include, look here, this is the traveling expense, 5,25,000. Include expenditure incurred on foreign tour. This auditor has gone outside India for some audit work of rupees 32,000, which was within the RBI norms. That means it is allowed by RBI, hence no problem. Nothing should be added back. If it was not allowed by RBI, then that amount should be added back. Medical insurance premium on health of dependent brother and major son dependent honor amounting to 5,000 and 10,000 respectively paid in cash. Medical insurance premium paid by check. Since it has been paid by cash, put it on dustbin. You are not entitled to claim deduction. Number 2, brother is not at all form part of family. Because set 1, set 2, set 1, ATD, SSD, self, spouse, dependent children. Parents whether dependent or not. She invested amount of 10,000 in NSC. If you invest 10,000 in NSC, you are entitled to claim ATC. But in order to claim ATC, you should travel through the computer total income and tax payable of Purvi for assessment year 26-27. They have not mentioned anything about the route. That means you are supposed to calculate both the routes, my dear lovable students. Pakka? First, I am calculating under the default tax regime. Easy calculation because many deductions won't be there. First, there is no information regarding income from salary. Even though no information, still I will write and I will put a dash. Something has to be written in exam, no? Right, sir. Number 2, income from house property. I will be calculating income from house property. My dear lovable students, this house property income has been credited to what account? P&L account. So it's an impurity for PGBP. So I have to remove it from PGBP. How much rupees? 85,600. So first I will remove it from PGBP. Can we? This is what the PGBP income is all about. Look at here, man. Sorry. They are calculating here. Okay. House property 57,820. I think below it is there. Yes, this is house property and this is income from business. First, since it is an impurity, I will be taking net profit as per income and expenditure account and I will be removing the impurity. Look here, rent receipt from letting out of flat. How much? 85,600. And this 85,600 I will be including in the income from house property as gross annual value. Since fair rent, municipal value, standard rent, all this information has not been given in the. This 85,600 will be taken as the gross annual value. Is there any LT bar MT paid by the owner? That LT bar MT has been debited to P&L account. This is an impurity for PGBP. What adjustment I should do in PGBP? Should be NA back. So in the PGBP, look at here, man, municipal taxes paid should be added because that 3,000 rupees net profit would have been reduced. And this 3,000 can we claim it as a deduction under IFHP. Able to appreciate? You will be getting net annual value. From the net annual value, 30% deduction has to be reduced. So 82,600 into 30% comes to 24,720. Balance 57,820 will be the IFHP. 57,820. Are you comfortable? Coming to PGBP, the hero, the real hero is PGBP. Come on, man, we should start with net profit as per P&L account. What is the net profit? 9,28,224. Am I right, sir? And expenditure is debited but not allowable. Like salary paid to a computer specialist. What is the mistake? Single day you paid in cash more than. What is a section 40A subsection 3? Entire 30,000 should be added back. Amount paid for purchase of car is not allowed because as per section 31 only revenue expenditure are allowed. Whereas purchase of car is a capital expenditure. Hence that 80,000 should be added back. But for that car, you are entitled to claim. So 80,000 into 15%. That's what the rate they have set. 80,000 into 15. This 12,000, don't forget to reduce from the PGBP. Able to appreciate? That's it, man. You will be getting subtotal. Add value of benefits. Because of your business or profession, have you got any gift or benefit? Should be taxable under the head PGBP under section 28 clause 4. If you are not confident with clause, write 28. If you are not confident with 28, as per the provisions of Income Tax Act, that's it. How you are writing as per the provisions of Companies Act 2013, the same way. My dear lovable students, 10,500. Actually, this 10,500 should have been credited to P&L account. Am I right, sir? Since it has not been credited to P&L, it has not increased the net profit. So I'm manually increasing it by adding 10,500. I will be getting subtotal. I'll be getting. These incomes are impurities for the PGBP, should be removed from PGBP and should be included in the respective head. Like dividend, sir, 10,524 should be removed from PGBP and should be included in. That's what I'm calculating IFRS. Immediately 10,524 time can save in examination. Income from UTI, since it has been credited to P&L, net profit would have been increased. I have to reduce 7,600 from PGBP and immediately that 7,600 should be included in the IFRS. Honorarium received is an IFRS income. Since it has been credited to P&L, net profit would have been increased. Should be removed from PGBP and should be included in the IFOS. This 85,600 is IFHP. Should be removed from PGBP and should be included in the IFHP. I have included in the IFHP. What a beauty, tax. Super fantastic. You will be getting subtotal, my dear lovable students. This subtotal is before depreciation. So I'm supposed to reduce the depreciation. You'll be getting, sir, PGBP 9,20,200. That's what they have written here, 9,20,200. Any problem? No capital gain information given. Sir, IFOS, immediately parallelly we finalize 33,924. Look at here, man. 33,924 is the IFOS. Any problem? That's it. What is the gross total income? Gross total income is 10,11,944. This is what tax regime? Default tax regime. There is no question of chapter 6A at all. You will be getting taxable income 10,11,944. 10 lakh. Tell me. 10,11,944. Is it less than 12 lakh? Under default tax regime, up to 12 lakh, you can claim rebate under 87A. So even though you calculate the tax payable, entire tax payable can be claimed as rebate under. That means, sir, the tax liability should be nil, my dear lovable students. Tax liability should be nil under default tax regime. If you want, we can calculate 10,11,940. First 4 lakh nil. 4 lakh to 8 lakh. 5%. எவ்வளோ 28 lakh to 12 lakh அவ்வளோ இல்லை. So 10 lakh 11,940 minus 8 lakhs comes to 2 lakh 11,940 into how much percent? 10% comes to 21,001. So the total tax payable under the default tax regime is 41,194. Less rebate under 87. Since the total income does not exceed 12 lakh, statutory limit of 60,000 or amount of tax payable, whichever is lower. Am I right, sir? Statutory limit of 68,000. Like confidence, 60,000. This is the statutory limit under default tax regime. Statutory limit of 60,000 or amount of tax payable, whichever is lower. Sir, how much is lower? So the tax liability will be 0 under the default tax regime. Now, the same question I am doing ulta as per the optional tax regime. What is the gross total income you have got here? 10,11,944. I have borrowed that. Hello, sir. My dear lovable students, income under income from house property, PGBP, other source would remain the same even if the Purvi opt to out of the default tax regime. That means even if she is traveling through the optional tax regime, because no difference items has been given in the question. Like section 35 adjustment illa 35 AD adjustment illa additional depreciation adjustment like that, nothing has been given in the. That means the gross total income as per default tax regime and optional tax regime are one and the same. But you can claim chapter 6A deduction under the optional tax regime. For that purpose, I'm going to calculate the chapter 6A deduction. Can we? My dear lovable students, under 80C, have you invested in NSC? That can be claimed. But 80D, medical insurance premium should be paid by check, but it has been paid by cash. Because of that reason, you are not entitled to claim. So that 10,000 can be claimed as deduction, my dear lovable students. You will be having total income 10,01,944. Is this 10 lakh more than 5 lakh? 87 rebate will not be applicable. Able to appreciate? My dear lovable students, what is the assessee's age? 55. Age will be respected. That means normal. Up to 10 lakh, sir, 1,12,500. Am I right, sir? 1,12,500 plus, sir, 1,944 into 20% comes to, sorry, 30%. 1,944 into 30% comes to 583.2. So 1,12,500 plus, sorry, sir. This 4 rupees first should be round off because 288A should be applicable. Am I right? Otherwise, the very picture cost will come. That's why government is saying that we don't want that 0.2 and all. Am I right, Appa? So don't calculate on 10,01,944. Please, first of all, this put it on this 4 rupees in dustbin. Then say that 10,01,940. For that 10 lakh anyway, 1,12,500 plus 1,940 into 30% comes to 582. That's why total, sir, 1,12,500 plus 582 na 1,13,082. Comfortable? On that health and education of 4523, you will be getting total tax liability of 1,17,605. Again, one more round off. Because the last number is 5, next 10. So 1,17,610. Now you compare, since the tax refundable under default tax. Why refundable? Because there is TDS. There is what? Look at here in the question, sir, dividend is there gross. So for this dividend, the company would have deducted TDS. Income from UTI is there, honorarium is there, sir, rent is there. Am I right, sir? For this and all. And this guy sometimes would have paid advance tax also. Sir, since the tax payable is zero in the what tax regime? Default tax regime, whatever tax has been deducted as TDS, TCS, advance tax and all will be get it as what? Refund. And tax is payable under the optional tax regime. Poirade. Which route? Optional tax regime. Please go. Default tax regime. It would be beneficial for Miss Purvi. Tax under the what tax regime? Default tax regime. I hope that you are falling into the discussion of the computation of total income, my dear lovable students. Are you feeling comfortable? If you are taking the weapon in your hand immediately after this lecture and solving this 3 questions by your own, question number 4, question number 5, question number 6. I don't know whether you love me or not, but you will love the subject tax. There is no doubt about it. You will be able to analyze, you will be able to connect. A student who does not put, sir, 100 of hours of effort will not be able to do this question. He should know PGBP provision. He should know capital gain provision, salary, house property, everything, entire tax, the subject. This subject gives us satisfaction. That satisfaction you should felt after doing this 3 question, my dear lovable students. In the coming slot, we'll be solving the next 3 from, sir, to our pocket, which is question number 7, question number 8, and question number 9. I believe that you, everyone, will take your pen, paper, pencil, and you will be solving this and come back to me. Sir, I am with you, sir, from your heart. Anybody is there? Where is the grand clap? Sir, very, very, very happy evening to all. So we are doing computation of total income, my dear lovable students. Sir, this is the first 15 mark area for examination. By doing these questions, sir, we can ensure at least, sir, that 12 to 15 mark, 12 to 10 to 12 mark from that slot minimum. We are going to do question number 7, question number 8 and question number 9 from this slot. This question is a little different question. Mr. Y carries on his own business. That means PGBP. An analysis of his trading and P&L account for the year ended 31/3/2026 revealed the following. Instead of giving the profit and loss account in T-shaped format, they have given P&L account in the, sir, normal particular statement format. Net profit was 11,20,000. Anyway, we will be starting only with the net profit as per P&L account. That has been straight away given. Following incomes were credited in the P&L. That means these 1, 2, 3 has been credited in the P&L. Dividend from UTI 22,000. Sir, this is a IFOS income. This is a impurity for the PGBP. Should be removed from PGBP and should be included in IFOS. Interest on debenture 17,500. This is an IFOS income. This is an impurity for the PGBP. Should be removed from PGBP and should be included in the IFOS. Winning from raises 15,000. This is a casual income. Again, this is an IFOS income. Should be removed from the PGBP and should be included in the IFOS. Normal adjustment, nothing more. It was found that this is called a stock adjustment. Sometimes the stock adjustment may be tested in exam. It was found that some stock were omitted to be included in both the opening stock and closing stock. The value of which were, that means accountant has not recorded the opening stock and closing stock. This is our normal trading account. Here we should have some basic knowledge in accounts. In the sense means if the closing stock increases, gross profit increases. If the opening stock increases, gross profit decreases. If gross profit increases, net profit increases. If gross profit decreases, net profit decreases. So the accountant, sir, forgot to record 8,000 rupees opening stock. So if we record now that 8,000, profit will come down. And closing stock 12,000, my dear lovable students. Since 12,000 rupees has not been recorded in closing stock, profit should increase by 12,000. So what you are supposed to do is, to the net profit given in the question, this stock of 12,000 and the stock of 8,000 has not been adjusted. So you have to add 12,000. You have to add 12,000 and you have to reduce 8,000. Or you can do the net adjustment, closing stock 12,000, opening stock 8,000, 12,000 minus 8,000, 4,000 is a net stock. Who is higher? Closing stock is higher. So to your net profit, add 4,000, then also effect will be same. Sir, which one you will prefer? I prefer separately deal with closing stock and separately deal with what? Opening stock. So opening stock is 8,000 and closing stock is 12,000. I hope you understood the stock adjustment. Rupees 1 lakh was debited in the P&L account, being contribution to a university approved and notified under 35 subsection 1 class 2. My dear lovable students, this is contribution to outsiders. This contribution to outsiders will be allowed as deduction only under the optional tax regime. You have to check the requirement of the question. Compute the total income of Mr. Y for assessment year 26-27 under optional tax regime as per the normal provisions of the Act. Since assessee is going to travel through the optional tax regime, this 1 lakh will be allowed as deduction. No adjustment is required. If the route is default tax regime, this 1 lakh should not have been debited to P&L account. Hence, it has to be back, added back. Salary include 20,000 paid to his brother. Brother is a related party, which is unreasonable to the extent of 2,500. So as per 40A subsection 2, related party transaction, that extra unreasonable amount should be back, added back. Regular adjustment. Advertisement expense include 15 gift packet of dry fruits costing rupees 1,000 per packet presented to important customer. This is a business promotion expenses. Business promotion expenses every businessman is supposed to do. My dear lovable students, since this business promotion expense are not covered under 30 to 36, which is not a capital expenditure, which is a revenue expenditure, which is not a personal expenditure, sir, which has been incurred wholly and exclusively for the purpose of business or profession, which is not a, sir, CSR, corporate social responsibility expenditure, which is not an infraction of law, then these expenditure can be claimed as a deduction under section 37, that is general deduction. Total expense on car is 78,000. 78,000 rupees is the expenses for car. Car was used for both business and personal. As per section 38, if asset has been used for both business and personal, only the proportion or percentage attributable to the business expenditure will be allowed it as a deduction. 3/4 is for business purpose. That means 1/4 of the expenses debited to P&L account should be back, added back. Miscellaneous expenses include 30,000 paid to A and Co. A GTA in cash. As we all know that, as per 40A subsection 3, to GTA up to 35,000 rupees you can pay in cash. This is only 30,000. For distribution of company's product to warehouse, that means no adjustment has to be done for point number 8. Depreciation debited in the books was 55,000. Generally, the depreciation as per the books will be calculated not as per the income tax rate. Will be calculated as per the accounts rate. So because of debiting that should be back, added back. Depreciation allowed as per income tax rules was 50,000. That means we have to add back 55,000 and we have to reduce 50,000. Drawings 10,000. Adapavi. Drawings has been debited to P&L account. Are drawings is a, sir, personal expenditure. Personal expenditure should not be debited to P&L. Am I right? Sir, where they have said, sir? Sir, an analysis of his trading and P&L reveal the following information. So when I see the P&L only, I understood that drawings has been debited to P&L account. Drawings is not a business expenditure. Drawings is a personal. It is not even an expenditure. It is a withdrawal. Am I right, sir? It should not be debited to P&L. Should be reduced from the capital account. Since it has been debited to P&L, should be back. And investment in NSC. This is an investment. This is not a business expenditure. Since this has been debited to P&L, should be back, added back. And it can be claimed as deduction under 80C. Since the assessee is traveling through the compute the total income of Mr. Y for assessment year 26-27 under optional tax regime as per the normal provisions of the Act. A flat normal question, my dear lovable students. Nothing is there. Instead of giving the P&L in a T shape, they have given as a explanatory statement, nothing. Computation of total income of Mr. Y. You tell me, is there any income from salary details given? No. Still write and put a dash. Income from house property, is there any house property details? No. Still write and put a dash. PGBP is the hero. We are going to calculate the PGBP. Come on, man. What is the net profit as per P&L? They themselves said that 11,20,000 rupees is the net profit as per P&L. Always we will start with the net profit as per P&L. Add expenses debited to P&L, but not allowable as deduction. Sir, these expense and all has been debited to P&L, but as per Income Tax Act, these expenses and all should not be allowable as a deduction. Am I right, sir? Salary paid to brother disallowed to the extent which are unreasonable. Sir, if you are able to write this section, the examiner will be impressed. As per 40A subsection 2, that is related party transaction. If the amount of expenditure is unreasonable or extra than the market price, that extra should be added back. So this 2,500 should be added back. I believe that my students will feel so much comfortable with regard to 40A subsection 2. As per section 38, sir, if any asset has been used for both business and personal, the expenses proportionate to personal part, which is 1/4, should not be debited to P&L account. Since we have debited to P&L account, should be added back. So 78,000 rupees out of 78,000, 3/4 is business expenditure. It has to be debited to P&L, no problem. But entire 78,000, 1/4 is personal in nature, should be added back. So 19,500 should be added back. Able to appreciate? Depreciation debited in the books of accounts. This depreciation would not have been calculated as per the income tax rate. Generally, this depreciation would have been calculated as per the accounts rate. Am I right? So this is not the depreciation allowable as per Income Tax Act. And immediately, my dear lovable students, you can reduce the depreciation allowable as per the income tax rules. Even that also they have given in the question. Even they are not asking us to calculate the depreciation. Coming to the next one, man. Drawings. Sir, it is not allowable since it is personal in nature. Drawing should not be debited to P&L account. It should be reduced from the capital account. So, my dear lovable students, that drawings 10,000, since it has been debited to P&L account, should be added back. And investment in NSC, it's an investment. Investment should come in the asset side of the balance sheet, not in the P&L account. Hence, this 15,000 should be added back. And since assessee is traveling through the optional tax regime, assessee is entitled to claim deduction under ATC. So, the subtotal is 12,22,000. From 11,20,000, if I add all this, I'm getting 12,22,000. My dear lovable students, the accountant missed to record some closing stock. You tell me, if closing stock increases, what will happen to net profit? Net profit increases at understatement of closing stock 12,000. 12,000. So the subtotal is 12,34,000. And the accountant has missed to record opening stock. If there is an increase in opening stock, what will happen to net profit? Net profit will reduce. Am I right, sir? So less understatement of opening stock is 8,000. 8,000 should be reduced. Less contribution to a university. You tell me, contribution to university is an in-house research or contribution to outsiders? Contribution to outsiders. Since the assessee is traveling through the optional tax regime, it can be claimed as deduction at the rate of 100%. Already that 100% has been debited to P&L, so no adjustment is. So from 12,34,000, if you reduce 8,000, you will be getting 12,26,000 as subtotal. Sir, these incomes and all credited to P&L account. Because of crediting this income to P&L, net profit would have been increased. These are impurities. Should be removed from PGBP and should be included in the respective head. Like income from UTI, 22,000. You tell me, after excluding this 22,000 from PGBP, immediately you should include in IFOS. That's what, man, sir. Dividend from UTI, 22,000. Comfortable? Then interest on debenture, amount of 17,500 should be removed from PGBP and should be included in. Immediately, please include 17,500. That's what interest on debentures. Winning from horse races, sir, 15,000. it has to be removed from PGBP and it has to be included in IFOS. So we will be ready with IFOS also. 54,500. And already we have reduced the depreciation. So the PGBP will be 11,21,500. That's what 11,21,500. A student should feel very comfortable with regard to the computation of total income, because the same thing we are repeating and we are doing nearly the 7th question from this area. Are you comfortable? There is no adjustment regarding capital gain. We already finalized IFOS just now. The total of IFOS comes to 54,500. I will be getting the gross total income, my dear lovable students. Now, since assessee is traveling through the optional tax regime, assessee is entitled to claim Chapter 6A deduction. Assessee has invested in one of the notified investments out of 21 investments. One of the investment is investment in NSC. So you are entitled to claim that 15,000 rupees as Chapter 6A reduction. The taxable income is 11,61,000. Sir, they have not asked the tax liability. They have just asked the taxable income. Let me ask you one question. Is this assessee entitled for 87A rebate when you are calculating tax liability? No, sir, because total income exceeds 5 lakh. Is this assessee liable to pay surcharge? No, sir, because the total income does not exceed 50 lakhs. Since surcharge is not applicable, automatically marginal relief concept also not applicable. Super fantastic to the core. With that, question number 7 comes to an end. Are you able to appreciate? Very easy cakewalk. Coming to question number 8. These notes, please read it because I have explained to you when I explained. Balamurugan furnishes the following information for the year ended 31/3/2026. Income from business, it is loss, 1,35,000. As we all know that, so first we have to do intra-head adjustment, then we have to do inter-head adjustment. Business loss can be set off against any head of income except salary. Am I right, sir? So this loss cannot be set off against salary. We can set off against any other head of income. Income from house property, 15,000. Basically loss. Sir, if you are traveling through optional tax regime, inter-head adjustment is possible up to an amount of 2 lakh. But if you are traveling through default tax regime, this has to be carried forward. Lottery winning, Pichakara family, sir, they will not allow any other loss against to be set off, because always lottery winning should be taxable in gross and should be taxable under IFOS. Speculation business income, my dear lovable students, we can happily do the intra-head adjustment. For the normal business loss, no restriction. For the normal business loss, no restriction. If you are having normal business loss and if you are having normal business income, you can happily set off. If you are having normal business loss and if you are having speculation business income, you can happily set off. If you are having normal business loss and if you are having specified business income under section 35 AD, you can happily set off. Whereas speculative business loss can be set off only against speculative business income. Specified business loss under section 35 AD can be set off only against specified business income under section 35 AD. Able to appreciate, sir? Income by way of salary, 3,70,000. Sir, this 1,35,000 can be knocked off against 1 lakh. Still, we will be having 35,000 rupees business loss. Sir, this 35,000 loss cannot set off against casual income. Cannot set off against what also? Salary also. Long-term capital gain covered under 112. Capital gain is a what family? Royal family. If they are having something, they will give to others. That means this 35,000 can happily be set off against this 70,000. Then balance only how much will be there? 35,000 will be there. Even this house property loss of 15,000 can happily be set off against, sir, either salary or long-term capital gain. Since the salary will be taxable at normal rate and capital gain will be taxed at special rate, I will try my level best to knock off the special rate first. That is a good tax planning. Am I right? Compute is total income. Okay, fine. We can compute total income. Tax liability. Okay, that also we can do. And advance tax obligation. Super. They are talking about advance tax. We have completed the chapter advance tax. If the amount of tax payable exceeds 10,000, then only advance tax provisions will be applicable. Under default tax regime under 115 BAC. They want under what tax regime? Okay, man. Can we do one by one? Computation of total income of Balamurugan for the year under 31/3/2026. Income from salary after set off of loss from house property. So you tell me, what is a salary income? 3,70,000. Sir, this how much is the loss from house property? 15,000. So 3,70,000 minus 15,000 comes to 3,70,000 minus 15,000 comes to 3,55,000. Sir, this is one option available, but this is not the best tax planning. Better tax planning is knock off the loss against the long-term capital gain. Am I right, sir? Come on, man. So that 3,70,000. Income from house property actually, right, sir? Sir, so this 3,70,000 we have fully written. Income from house property, actually house property loss of how much? 15,000. Am I right? So what is the tax planning? We thought, okay, this 15,000 instead of better set off against the salary, we are going to set off against long-term capital gain. Am I right, sir? Let me ask you one question. Under the default tax regime, have the interhead adjustment of house property allowed or not allowed? That means this 15,000 has to be what forward? Carry forward even against the capital gain. You are not supposed to be set off. This is the area where students will be making mistake. By overlooking that, okay, I am planning tax, then it will be best planning. First of all, see the root here, whether it is optional tax regime or default tax regime. If it is default tax regime, interhead adjustment of house property is not applicable. That means when you read the question itself, you have to mark in the question paper. Otherwise, when you read, that thing will be there in your brain. When you execute, you will execute wrongly and you will come back. Are you all understanding? That is why, man, sir, income from salary after set off of loss from house property, my dear lovable students, full salary you have to write. Income loss from house property is not entitled for what at all? Set off at all. Because we are calculating as per the default tax regime. Come on, man, PGBP. How much is the PGBP loss? 1,35,000. I can happily set off that against 1 lakh. So still how much loss will be there? 35,000. That 35,000 I can happily set off against long-term capital gain, and balance 35,000 loss will be the balance 35,000 long-term capital gain income will be there. Am I right? So entire PGBP has become 0. So that's what they are writing in note number 1, my dear lovable students. What is a speculation business income? 1 lakh. It is income. What is a business loss? 1,35,000. Still business loss of 35,000. This we can set off against long-term capital gain of 70,000. Less business loss set off 35,000. So long-term capital gain after set off of business loss is 35,000 will be coming in the main answer. Capital gain is 35,000. My dear lovable students, sir, casual income will be taxable on gross. Am I right? What is a casual income? Winning from lottery gross 5 lakh should be written as 5 lakh, because against the casual income we are not supposed to knock off any loss. You will be having the gross total income. 9,05,000 rupees is the gross total income. Able to appreciate? Let's chapter 6A deduction. Which route? Default tax regime. There is no question of chapter 6A at all under the default tax regime. So the taxable income will be 9,05,000. Am I right, sir? Now we have to calculate the tax payable under the default tax regime. Up to how much lakh? 4 lakh. It is nil. 4 lakhs to 8 lakh at the rate of 5%. That means 4 lakh into 5% comes to 20,000. What is the total income we got? 9,05,000. So extra 1,05,000 at the rate of 10% comes to 10,500. So 20,000 plus 10,500 comes to 30,500. Right, sir? Like this and all, you should not calculate. Because your income includes special income. Long-term capital gain. That capital gain should be taxed at 12.5%. Am I right? So my dear lovable students, sir, these are the mistakes a student will, sir, do. Paru, 4 line da, 40 mistake. Are you all really with me? Yes, sir. So my dear lovable students, sir, the total income is how much? 9,05,000. So the total income, 9,05,000, classified into 2 categories. Long-term capital gain taxable at 12.5% and other income. What is the amount of long-term capital gain? 35,000 after set off. So 9,05,000 minus 35,000 comes to 8,70,000. Am I right, sir? Less what exemption limit? Basic exemption limit. 4 lakh rupees is the basic exemption limit. Always I should knock off the basic exemption limit against the other income first. If the other income is not sufficient, then unexhausted basic exemption limit can be set off against a special income. So my dear lovable students, 8,70,000 minus 4 lakhs comes to 4,70,000 rupees is the other income. Am I right, sir? So already 4 lakh rupees over. So for this next 4,70,000, which comes to, sir, up to 4 lakh rupees nil. Am I right? Then 4 lakh to 8 lakh at the rate of 5%. That means what is the gap? 4 lakh. 4 lakh into 5%, 20,000. Over and above 8 lakh is how much? 70,000. So 70,000 into 10% comes to 7,000. So the total tax liability for the other income is 27,000. Am I right? This will be taxed at how much percent? 12.5%. So 35,000 into 12.5% comes to 4,375. Am I right, sir? So the total tax liability 27,000 plus 4,375 comes to 31,375 is the total tax liability. Hello, sir. Can we, sir? Sir, what was the total taxable income? 9,05,000. Sir, on total income of, yes, sir. Sir, the total tax liability what we have got is 31,375. But this is not the tax liability what they have given. Because in the total income of 9,05,000, not only long-term capital gain is there, but also casual income is there. Casual income will be taxable at a special rate of 30%. Be very, very careful. Come on, man. Again, one last time. Be with me. What is the total income? 9,05,000. That 9,05,000 should be classified into 3 categories. Am I right, sir? Number 1, casual income at 5 lakh. Am I right with the figures? Long-term capital gain at 35,000. So 5,35,000 rupees is the other income, special income. So 9,05,000 minus 5,35,000 comes to 3,70,000 rupees is the other income. First, you have to knock off the basic exemption limit of 4 lakh because under the default tax regime it is 4 lakh rupees. How much? 3,78,000. Still you are having 30,000. This is called as unexhausted basic exemption limit. My dear lovable students, unexhausted basic exemption limit cannot be set off against casual income because casual income should be taxable on gross. Whereas unexhausted basic exemption limit can be set off against long-term capital gain. Am I right, sir? So the balance taxable long-term capital gain will be just 5,000 rupees. Is this long-term capital gain covered under 112A? No. Then 1,25,000 slab will not be applicable. This is 112 flat. How much percent? 12.5%. So my dear lovable students, this other income has become 0. Now for this 5,000, you are liable to pay 12.5%. Am I right, sir? So 5,000 into 12.5% comes to 625 is the tax payable for the long-term capital gain. And this casual income, sir, at the rate of 30%. So 5 lakh into 30% comes to 1,50,000. So 1,50,625 is the tax payable. Totally you are liable to be paid. Can we check, sir? 1,50,625. And health and education says at the rate of 4%. So 1,50,625 into 4% come to, sir, 6,025. Am I right, sir? So 1,50,625 plus 6,025 comes to 1,56,650 is the total tax liability. Let me ask you one question. What is the route you are traveling? What tax regime? Is rebate under section 87A will be available under default tax regime? Yes, sir. In order to claim rebate under 87A, total income should not exceed 12 lakhs. What is a taxable income? 9,05,000. But still, are you liable to claim rebate under 87A? Against casual income, is rebate under 87A allowable? Not allowable. Against casual income, rebate under 87A allowable? Not allowable. Not allowable. Against 112 income, this is only 112, not 112A. What we studied is 87A. 112A will not be applicable. But this is 112. Against long-term capital gain is 112 allowable, sir. 87A rebate allowable, not allowable? Allowable. That means the 625 can be claimed it as rebate under what? 87A. Am I right? Whereas this 1,50,000 is the tax for casual income that cannot be claimed as 87A rebate. Come on, sir. The assessee need not pay advance tax since the total income excluding lottery income liable to be taxed is below the basic exemption limit. If you remove the lottery income, other than lottery income, assessee's income is less than basic exemption limit. If the income is less than basic exemption limit, assessee is not liable to pay any advance tax. Further, in respect of lottery income, tax would have been deducted at source at how much percent? 30% under 194B. Since the remaining tax liability of only 6,650, which is nothing but for this 5,000, sir, 625 only tax liability. Even that too you can claim it as rebate under what? 87A. So no tax liability at all basically. Hence that assessee is not liable to pay advance tax. Am I right, sir? That's it, man. PGBP income and all they are giving. Sir, that amount you claim it as 87A rebate. Can I move into question number 9? Again, a P&L based question we are coming, but this is receipts and payments account question instead of P&L account. Mr. Rajiv, aged 50 years. What is age, man? 50. A resident individual and practicing chartered accountant furnishes you the receipts and payments account for the financial year 25-26. Opening balance 1/4/2025 cash in hand. Is this income? No, this is asset. Fees from professional service. This will be taken in the PGBP. Rent. This will be taken in IFHP. Motor car loan. Sir, loan is a capital receipt, but for that loan, sir, interest at the rate of 9%. If you paid interest now, you can claim it as a deduction. Salary to staff, bonus, stipend to article is allowable expenditure. Other administration expense are allowable expenditure. Office rent are allowable expenditure. Housing loan repaid, SBI, include interest of 88,000. This 88,000, 24B is allowed if you are traveling through optional tax regime. And this principal, which is 1,88,000 minus 88 comes to 1 lakh. You are entitled to claim 80C if you are traveling through optional tax regime. Life insurance premium, you are entitled to claim deduction under 80C. Motor car acquired by check will not be allowed it as deduction, but you can claim depreciation for the motor car. Am I right, sir? Medical insurance premium for self and wife, you are entitled to claim 80D if you are traveling through the optional tax regime. Books bought on 1/7, sir, annual publication, whether it is annual publication or other than annual publication, my dear lovable students, 40% is the tax rate. Since it is from 1/7, it has been put to use for more than 180 days. So this amount, you can claim it as depreciation. Computer acquired on 1/11 for professional use 30,000. Since it has been put to use for more than 180 days or less than 180 days. It is entitled for 20%, which is 40% or 50%. Are you really with me? Yes, sir, which is 40% into 50%. Domestic drawings is not an allowable deduction. PPF subscription, you are entitled to get 80C if you are traveling through optional tax regime. Motor car maintenance can be claimed as a deduction. Closing balance is not an expense, it's an asset. Following further information is given to you. He occupies 50% of the building for own residence. That means, have you paid any rent? Office rent, how much? 30,000. He is receiving rent also. How much rupees? 50,000. Oh, he's receiving rent and paying rent. Now, he occupies 50% of the building for what residence? Own residence. And let out the balance for residential use at a monthly rent of 5,000. That means, my dear lovable students, they are talking about this building, the building which you have let out. In that building which you have let out, 50% is self-occupied and remaining 50% is let out. Sir, if you are traveling through the optional tax regime, that 50% can be, sir, claim it as deduction 24B. Now, 5,000 into 12, 60,000 should be the gross annual value. But we have received a rent of only how much? 50,000. That means there is a short of 10,000. Sir, cash system may be applicable for PGBP, but cash system is not applicable for IFHP because expected rent or actual rent received or receivable, whichever is higher. Building was constructed during 1997-1998. Loan should be taken on or after 1/4/1999 when the housing loan was what man taken. That means for this housing loan, sir, have they paid any interest? Yes, 88,000. Since a loan has been taken before that date, it should be restricted to 30,000. Able to appreciate? Motor car was put to use for both official and personal purpose. That means section 38 implication they are saying 1/5 of the motor car is for personal purpose. So 1/5 of the motor car expenses should not be allowed it as a deduction. Whereas, sir, 4/5 of the motor car is for business purpose, that will be allowed as a deduction. No car loan interest was paid during the year. If it has not been paid, it cannot be claimed as a deduction because you are following cash system of accounting. WDV of asset as on 1/4/2025 are given below. Furniture and fitting 60,000, plant and machinery 80,000, computer 50,000. For this and all, you are entitled to claim depreciation. Mr. Rajiv regularly follows cash system of accounting that is allowed in PGBP. Compute the total income of Rajiv for assessment year 26-27, assuming that he has shifted out of the default tax regime. That means he is going to travel through the optional tax regime. Easy question, normal question, but here and there you should be careful. Come on man, income from salary. Is there any salary implication? No. Put a dash. Income from house property. We are supposed to compute income from house property. Actually, house property is having two parts, which is self-occupied property 50% and let out property is also 50%. Am I right, sir? Come on, sir. For a self-occupied property, GA will be nil. Less LT bar MT paid by the owner, nil. Net annual value, nil. Deduction under section 24A, 30% of net annual value, nil. What is the total interest, my dear lovable students? What is the total interest paid? 88,000. Because if you see the cash account, total amount paid by them is 1,88,000. In that 1,88,000, 88,000 is for the house as a whole. So 88,000 divided by 2 na 44,000 is the interest attributable to self-occupied property. Am I right, sir? And go and read the conditions, my dear lovable students. He occupies 50% of the building for own residence and let out the balance for residential use at a monthly rent of 5,000. The building was constructed during 1997-1998 when the housing loan was taken. So, housing loan repaid to SBI includes interest of 88,000. Out of 88,000, 50% of the interest attributable to self-occupied portion. Am I right? Since assessee is traveling through the optional tax regime only, is entitled to claim 24B. But in order to claim 24B, assessee should satisfy 3 conditions. Loan should be taken on or after 1/4/1999. Have the loan has been taken 1/4/1999? No, sir. The building was constructed during 1997-1998 when the housing loan was taken. So, this 44,000 rupees of interest should be restricted to how much? 30,000. Am I right? But loss from self-occupied property they have given as 44,000 itself. So can I change the year? This 1997-1998 just to in line with the answer man. So constructed the house during 1999 to 2000. Now the condition has been changed. Okay, sir. Question would have been changed. We would have not changed the question. I will check it and I will update in the PDF. That's it, man. So you tell me, since all the conditions has been satisfied now, are you entitled to claim up to higher limit of 2 lakh? So the loss from house property will be 44,000. Come on, man. Let out property. Sir, gross annual value. What is the monthly rent? 5,000. Is the cash system applicable for the let out portion? No. Because accrual system will be applicable. Because expected rent or actual rent received or receivable, whichever is 50,000 rupees is the gross annual value. Less LT bar empty, no LT bar empty information has been given in the question. Sir, you will be getting the net annual value of 60,000. On that 30%, which comes to 18,000 rupees is the net annual value. And deduction under 24B, sir, earlier total 88,000 rupees is the interest. In that 50% will go to self-occupied property. Am I right, sir? Yes, sir. The remaining, how much? 44,000 should be claimed as deduction in the what property? Let out. So 44,000 plus 18,000 means total 62,000 total deduction coming. But we are having only NAV of 60,000. It will lead to loss of 2,000, my dear lovable students. Answer is correct. Hello, sir. So here also loss, here also loss. Hello, sir. So 40 plus 2,000 total 44 plus 2,000 comes to 46,000 is the income from house property loss. Since you are going to travel through the what tax regime, you can do indirect adjustment. I am waiting to do indirect adjustment with the other heads of income. Because under the optional tax regime, loss from house property can be set off against any head of income up to an amount of super. Now the hero, PGBP. Profits and gains of business or profession. Can we? Come on, sir. PGBP. Sir, profits and gains of business or profession. What is the fees for professional services given in the question? Go and check the receipts and payments account. In this receipt side, only pick the PGBP receipt. Is the opening cash balance PGBP? No. But fees for professional service, 59,38,000. That's what 59,38,000. Are you able to appreciate? Next one. Sir, is the rent PGBP income? No. We already included in the IFHP income. Is car loan income? No, it's a liability, yeah. So even that will also not come. Only 59,38,000 will come as the income of the PGBP. From that, I have to reduce expense. Go and analyze the payment side. Is the staff salary, bonus, stipend to article and all related to profession? Yes. So this 21,50,000 can be reduced from the expenses. Am I right, sir? Other administrative expenses relating to profession? Yes. Then this 11,48,000 can be claimed as a reduction. Is office rent of 30,000 is related to profession? Yes. So this 30,000 can be claimed as a deduction. Am I right, sir? Motor car, sir, this housing loan is not a business expenditure. A life insurance premium is not a business expenditure. Motor car acquired. Sir, for motor car, you can't claim deduction. But for depreciation of the motor car, you can claim deduction. Am I right? Sir, motor car, 4,25,000. Come on, man. Sir, you can claim 4,25,000 into 7.5%. Depreciation will come later. Motor car depreciation, let it be there. Is there any motor car expenses given in the question? Maintenance? Yes. How much? 10,000. If the motor car has been used partly for official and partly for personal, even motor car maintenance also should be proportionate. Am I right? So 10,000 into 4 by 5 only will be allowed as a business expenditure. So only 8,000 will be allowed it as a business expenditure. Car loan interest, it is not allowable because it has not been paid. Not paid means cash system, it won't be allowed as a deduction. So the subtotal will be 26,02,000. Am I right? Now you are supposed to claim the depreciation for every item. Sir, motor car, opening WDV has been given. Look, sir, motor car is there. Currently you have purchased motor car. What is the cost of the motor car? For this 4,25,000, since it has been put to use for less than 180 days, it is entitled for only half the rate of depreciation. Instead of 15%, you will get only 7.5%. That too, in that depreciation, only 4/5 will be allowed because 1/5 of the car has been used for personal purpose. So 25,500 is the motor car depreciation. Any problem? Books being annual publication, you tell me what is the books purchase? 20,000. Sir, this has been put to use for more than 180 days or less than 180 days. So books 20,000 into 40% comes to 8,000. Next one, furniture and fittings. What is there any furniture and fittings purchased during our year? No. But is there any opening furniture and fitting? Yes. So 60,000 into 10% comes to 6,000. Because if it is there from opening, it would have been put to use for more than 180 days. Plant and machinery. We are having plant and machinery from start. So 80,000 into 15% because general rate of depreciation for plant and machineries, you are entitled to claim 12,000. Computer, my dear lovable students, computer 50,000. Have you acquired any computer during this year? Yes, 30,000. But this has been put to use for less than 180 days. So for old computer, 50,000 into 40%. For the new computer, 30,000 into 20%, basically 40% into 50%, 6,000. So if you reduce all the depreciation, you will be getting profits and gains of business or profession. 25 lakh 24,500, man. This is 25 lakh 24,500. There is no capital gain information. There is no IFRS information. So since I am going to travel through the optional tax regime, I can happily knock off loss from house property up to an amount of 2 lakh. My gross total income will be 24 lakh 78,500. Any problem? Now, man, coming to chapter 6A deduction, they were talking about lot of chapter 6A. Sir, housing loan principal repayment. If you repay housing loan, it is entitled for deduction under ATC because total 1,88,000 was there. Am I right, sir? So 1 lakh can be claimed as a deduction. PPF subscription, if you look at, sir, public provident fund subscription is there to the extent of what? 20,000. Even that is also entitled to claim deduction under ATC. Life insurance premium paid. Yes, you have paid life insurance premium of how much? 24,000. Even that is also entitled to claim deduction under ATC. Sir, total 1 lakh plus 20 plus 24 now 1,44,000. No problem. Because under ATC alone you can claim 1,50,000. But here it is only 1,44,000. I can happily claim 1,44,000. Now medical insurance premium paid. Sir, medical insurance of 18,000 is there. That can be claimed as a deduction. So the total deduction will be 1,62,000. My dear lovable students, here 1,62,000 is the chapter 6A. You will be getting the taxable income 23,16,500. Are you comfortable with this question? So let me tell you, let me redo this question within 2 to 3 minutes. In the sense means, I will tell you an adjustment, you tell me where it will come. Sir, Mr. Rajiv, aged 50 years, a resident individual, practicing chartered accountant, furnishes you the receipts and payments account for the financial year 25-26. Opening cash balance. Will opening cash balance will come anywhere? No, sir. Fees from professional service. Where it will come? It will come as the income of the PGPP. Are you able to picturize what we have done? Rent, man, this is rent received. Rent received should be taxable under the head IFRS, but here we received only 50,000, but the rent per month is 5,000. So 5,000 into 12 comes to 60,000. 60,000 should be taxable under the head IFRS. Pakka. Motor IFHP. Motor car loan from Canara Bank. This is a, sir, capital receipt. Loan taken is not an income. It will never become. But this interest, if this loan has been used for business or profession, that interest can be claimed as a deduction, but that interest has not been paid. Since assessee is following cash system, the interest cannot be allowed as a deduction. Easy. Debit side or receipt side of the receipts and payments account done. Staff salary, bonus, stipend to article assistant is a normal PGBP expenditure. You can claim it when you are calculating PGBP. Other office administration is a normal PGBP expenditure. You can reduce it. Office rent 30,000 is a normal PGBP. You can reduce it. Housing loan repayment total 1,88,000. Here 1,88,000 should be classified into two categories. 88,000 of interest and 1 lakh rupees of principal. Am I right, sir? Sir, this 88,000 should be classified into two categories. 44,000 and 44,000. This 44,000 is for self-occupied property and 44,000 is for let-out property because 50% self-occupied and 50% let-out. Whereas this 1 lakh can be claimed as deduction under ATC. Able to appreciate? Life insurance premium is entitled to claim deduction under ATC. Motor car, you are not entitled to directly claim the deduction, but depreciation on motor car can be claimed. Since it has been purchased for less than 180 days, Jan 2026 should be the date, then it is entitled for only 7.5%. Medical insurance, 80D deduction you can claim. Books, annual publication, more than 180 days, 40% depreciation you can claim. Computer, less than 180 days, only half the rate of depreciation, which come to 20%. Domestic drawings will not reflect at all. PPF, you are entitled to claim ATC. Motor car maintenance, you can claim it as deduction against PGBP, but since a car is not 100% used for official purpose, it has to be restricted to 4/5, my dear lovable students. Closing balance is there. Am I right, sir? Sir, this adjustment, He occupies 50% of the building for own residence. That means they are talking about the building which we receive rent. So should be classified into two categories, SOAP and LOAP. For SOAP, you can claim 44,000 rupees. And for the LOAP, you can claim 44,000 rupees. And for LOAP, when you are taxing, GAV should not be 50,000, GAV should be 60,000. Have you all noted that point? Motor car, please restrict the depreciation of the motor car to 4/5 and please restrict the motor car expense also to 4/5 because, sir, section 38 will be applicable. Asset has been used partly for business and partly for personal. These all are asset details has been given in the question. Then, my dear lovable students, since it has been put to use for more than 180 days, it is entitled for full rate of depreciation. Calculate the depreciation and reduce it from the PGBP. You can easily calculate the total income because assessee is traveling through the optional tax regime. That's it with regard to question number dash, dash and dash 7, 8 and 9. It's very easy to explain in words, but if you sit and do, then only you will get the flow. If you are only listening to the lecture, you will understand that there is a chapter called as computation of total income. But if you are sitting and doing, surely it will build and the confidence will be, sir, building. Here and there, one or two mistakes are there in the material. When I update the PDF, I will be updated PDF for you. When you see the updated PDF, you'll be able to appreciate or understand. Redo question number 7, 8 and 9 and come back to me. We'll be solving the remaining questions of the computation of the total income. Sir, very happy evening to all. So we are doing computation of total income, my dear lovable students. In that computation of total income, till the last slot, we have completed 9 questions. We are pending with 10, 11, 12 and 13. Only 4 more questions are pending. Out of that, we will solve first 2 questions in the slot and we'll be doing 2 more. That will be our last slot for DT. With that, subject DT will comes to an end. Very easy question. Question number 10. Shall we start the proceedings? From the following details, compute the total income and tax liability of Mr. S, aged 31 years. Age is relevant under the optional tax regime. Age is irrelevant under the default tax regime of Delhi. Both as per 115 BAC and as per the regular provisions of the Income Tax Act for the assessment year 26-27. So we have to calculate the total income and tax liability both under the default tax regime and also under the optional tax regime. Advise Mr. Siddharth in which regime he should pay tax for assessment year 26-27. The regime in which the tax liability is less, as per that regime, he is liable to pay the tax. Salary including DA is 4,35,000. Okay. Bonus 15,000 fully taxable. Salary of servant provided by employer, this will be treated as perquisite, my dear lovable students. Rent paid by Siddharth for his accommodation, you have to check that whether the employer has given HRA or not. If employer has given HRA, under the optional tax regime, is entitled to claim 1013A. Under default tax regime, it is fully taxable. And you have to check one more thing. Is he eligible for 80 GG? Govinda. Sir, that point, 90% of the students won't check. You have to check it. Bills paid by employer for gas, electricity and water provided free of cost at the above flat. Again, that's a perquisite. It will be taxable in the hands of the employee. Additional information. Siddharth purchased a flat in Cooperative Housing Society in Delhi for rupees 4,75,000 in April 2016. Which was financed by loan from Life Insurance Corporation of India of rupees 1,60,000 at the rate of 15% interest. His own savings of 65,000 and deposit from nationalized bank for rupees 2,50,000 to whom this land was given on lease for 10 years. The rent payable by bank was 3,500 per month. That means they are talking about the rental income. That is income from house property. He is getting rent. LT bar MT details has not been given in the question. You will be getting net annual value, claim 30%, and since he has taken loan, IOBC can be claimed. Since this is let out property, under both the option, let out property will be allowed. Following particulars are relevant. Municipal taxes paid by Mr. Siddharth is 4,300. LT bar MT paid by the owner can be claimed as a deduction. House insurance 860, put it on dustbin. There is no such deduction for that. He earned 2,700 in share speculation business and lost 4,200 in cotton speculation business. Both are speculation business. Speculation business loss can be set off only against speculation business income. So there is a loss of 4,200 and there is an income of 2,700. So you can use this 2,700 to knock off this loss and balance can be carry forward. In the year 21-22, he has gifted 30,000 to his wife and rupees 20,000 to his son who has aged 11, minor son. The gift amount were advanced to Mr. Rajesh who was paying interest at the rate of 19% per annum. Sir, from the gifted amount, if any income has been accrued or risen, it will be taxable in the hands of the transferor as per the clubbing provisions. Am I right, sir? Siddharth received a gift of 30,000 each from 4 friends. That means 30,000 into 4 comes to 1,20,000, which exceeds statute limit of 50,000. It will be fully taxable under the head IFOS. He contributed 50,000 to PPF. It is entitled to claim deduction under 8EC if he is traveling through the optional tax regime. So I'm going to calculate total income, my dear lovable students. Be with me and enjoy the discussion. Sir, computation of total income and tax liability of Siddharth under the default tax regime. Number one, the first head is income from salary. Can we calculate the income from salary? Yes, sir. Sir, first one, what tax regime? Default tax regime. Is default tax regime I love you da or I hate you da? I love you da. So income from salary, already all details has been pakka straight away given in the question. Salary including DA is 4,35,000. Am I right, sir? Bonus straight away given in the question that 15,000 is the bonus. Salary of servant provided by the employer 12,000, which is given in the question. Free gas, electricity and water, my dear lovable students, sir, 11,000, which are straight away given in the question. 4,73,000 rupees is the gross salary. Sir, I have taken salary, I have taken bonus, I have taken salary of the servant, I have taken bills paid by the employer. Sir, this is rent paid by the Siddharth. Rent paid by Siddharth means from the basic salary what he has received, he would have paid the rent. Sir, that you don't please include as gross salary. Because from this 4,35,000 rupees only, he would have paid the rent. Less standard deduction, since the route is default tax regime, it's I love you da, 75,000 can be claimed. So the taxable salary will be 3,98,000. That's what I have written here. Income from salary, 3,98,000. Are you comfortable with the computation of income from salary? The only difference between default tax regime and optional tax regime is the standard deduction in this question. Under optional tax regime, you can't claim 75,000. You can claim only 50,000. So extra deduction of 25,000 will be there under the default tax regime. Able to appreciate? Fantastic to the core. Coming to income from house property, my dear lovable students. Sir, they said that there was one flat is there, the story of flat and all they said. Monthly rent of how much? 3,500. So calculator, 3,500 into 12 comes to 42,000 rupees is a gross annual value. Are you all really with me? Because fair and municipal value, all those details and all not given in the question. Less LT bar MT paid by the owner. In adjustment number 1 itself, they said municipal tax paid by Mr. Siddharth is 4,300. You can happily reduce the municipal tax. So the net annual value will be 37,700. On that 37,700, you can claim 30%. So 37,700 into 30% comes to 11,310 is the 30% deduction under 24A. Common man IOBC. Sir, IOBC, they have given in the question. I have to read it, the adjustment. Siddharth purchased a flat in Cooperative Housing Society in Delhi for 4,75,000. The total cost of that flat is 4,75,000. It has been purchased very long back in April 2016. Which was financed by a loan from Life Insurance Corporation of India. How much, man? 1,60,000 at the rate of 15% interest. So 1,60,000 into 15% comes to 24,000 is the IOBC. So that 24,000 can be claimed as deduction. Here, since the property is a let out property, no need to check whether it is for construction, acquisition, repair, all those things are not required. So from 37,700, if you reduce 11,310 and 24,000, you will be getting 2,390 as the IFHP. My dear lovable students, there won't be any difference of IFHP calculation under the default tax regime and the optional tax regime since the house is a super, sir. There is no PGPP information has been given in the question. No capital gain information has been given in the question, but there are IFOS, income from other sources are there. What are the IFOS? In salary, no IFOS is there. but he earned 2,700 share speculation business, something, some story has been given, some clubbing provisions of sir details has been given. All these should be taken care in the income from what sources, man? Other sources. Come on, man, income from speculation business, which is basically PGBP, because PGBP has been classified into three categories: normal business, speculation business, specified business under section 35 AD. How much is the income from share speculation business? 2,700. 2,000. My dear lovable students, less loss of 4,200 from quote and speculation business. Sir, out of 4,200, we can set off to the extent of 2,700 because loss from speculation business can be set off only against profit from speculation business. So income from business is nil. That's what here the PGBP is dash. Sir, PGBP is nil. Nil means, sir, actually there is something, but after set off, it has to be what forward? Carry forward. The balance loss of 1,500 from cotton speculation business has to be carry forward to the next year, as it cannot be set off against any other head of income. Are you able to connect with the set off carry forward? Because loss from speculation business can be set off only against profit from speculation business. Come on, man. IFOS, income from other sources. Sir, number one, interest on account of income on account of interest earned from advance money gifted to his minor son. Have the assessee gifted something to the minor son? Yes. How much amount has been gifted to minor son? 20,000. On this 20,000, my dear lovable students, minor son has received 19% interest. Calculator. 20,000 into 19% comes to 3,800. In order to get interest, do you need any skill? No, sir. Even a beggar put an FD, bank will give interest. Even a beggar put an FD, bank will give interest. No need of skill required to get the interest. So, my dear lovable students, this 3,800 will be taxable in the hands of parents who are having higher income. And under default tax regime, 10 subsection 32, 1,500 rupees concept are also not there. That's what they are saying. Sir, minor son's income is includable in the hands of the parent under 64 subsection 1A. Exemption under 1032 would not be available. But if you are traveling through the optional tax regime, this 1,500 can be claimed as a deduction. Number two, my dear lovable students, interest income earned from advancing money gifted to wife. As we all know that, to the wife, if any remuneration has been earned by the wife from a concern in which the individual is having substantial interest, then it will be clubbed in the hands of the another individual who are having substantial interest. Sir, because of directly transferring any asset to wife or indirectly transferring any asset to some other person for the benefit of wife, then it will be clubbed in the hands of the individual. Here, my dear lovable students, sir, this husband has given, sir, 30,000 rupees to his wife. That wife has put that on FD. Sir, FD is giving how much percent interest? 19%. So 30,000 into 19% comes to 5,700. And don't ask 1,500 rupees and all. Sir, only for minor child, that 1,500 rupees concept will be applicable. For wife, there is no 1,500 rupees. Gift received from 4 friends. My dear lovable students, first of all, friends are not relatives. Number two, there is no specific occasion has been given in the question. So it is taxable under 56 subsection 2 class 10 as aggregate amount received during the year exceeds 50,000. Total 1 lakh. So the total taxable IFOS will be 1,29,500. That's what we have written here, 1,29,500. If you add everything, you will get the gross total income of 5,29,890. There is no chapter 6A deduction concept under default tax regime. 5,29,890 is the taxable income. Since, sir, there is no capital gain, there is no even casual income also under IFOS, my dear lovable students, assessee is entitled to claim rebate under 87A. Sir, what is the threshold limit for 87A rebate under default tax regime? 12 lakh. Is the total income exceed 12 lakh? No. 5,29,890. Sir, first we have to calculate the tax payable, sir, for the 5,29,890. They want tax liability also. Look at here. Sir, as per default tax regime, the basic exemption limit is 4 lakh. Up to 4 lakh, no tax. Whereas 5,29,890 minus 4 lakh means 1,29,890 is the extra income earned. What is the rate applicable? 5% into 5% comes to 6,495. Less rebate under 87A. Since the total income does not exceed 12 lakh. Entire amount. That means statutory limit of 60,000 or tax payable, whichever is lower, can be claimed as 87A rebate. That means for this guy, this assessee is not liable to pay any amount because, sir, up to 12 lakh rupees, there is no tax liability under the default tax regime. Now, I'm going to calculate the tax liability under the optional tax regime. No need to rework everything, my dear lovable students. I will start with the gross total income as per the default tax regime. If you see, this is the gross total income as per the default tax regime, 5,29,890. Then I will correct only the differences. In the sense means, this salary has been computed under the default tax regime after standard deduction of 75,000. But under the optional tax regime, only how much is allowed? 50,000 is allowed. So extra, how much has been reduced? 25,000. That 25,000 should be back. Added back. That's what I'm going to do. Add standard deduction. 25,000 being excess amount allowed under 115 BAC. 25,000. That's it. Salary corrected. Is there any problem with IFHP? No. Sir, the amount of answer as per IFHP for default tax regime and optional tax regime are one and the same. Sir, PGBP, nothing. Because speculation business, same rules are applicable both under the both routes. There is no capital gain data. IFOS, this IFOS has been computed without claiming 1,500 rupees deduction under 1032. Since if you are traveling through the optional tax regime, you can claim 1,500. That means total income should come down. That's why I'm reducing 1,500. Exemption under 1032. My dear lovable students, this is my gross total income. 5,53,390. Have the gross total income exceed 5 lakh? Then I am not entitled for rebate under 87A under the optional tax regime. What is the age of the assessee given? The age is 31. 31. That means 2,50,000 rupees is the basic exemption limit. So 2,50,000 to 5 lakh at the rate of 5%, 12,500 plus 5,53,390 minus 5 lakhs comes to 53,390 into 20%. Am I right, sir? Sir, 12,500 plus 10,678. But the another difference between the default tax regime and the optional tax regime is the Chapter 6A deductions. Am I right, sir? This is only gross total income. Under the default tax regime, there won't be any Chapter 6A deduction. But the another difference between the default tax regime and the optional tax regime is Chapter 6A. Any Chapter 6A which we have skipped, yes, sir, he contributed to PPF. If you contributed to Public Provident Fund, you are entitled to claim deduction under ATC. That this 50,000 we would have not claimed under the default tax regime. So the total income under the optional tax regime is 5,03,390. Comfortable. Still the total income is more than 5 lakh. That means assessee is not entitled to claim rebate under 87A. Now I am calculating the tax liability under the optional tax regime. Sir, actually default tax regime, zero tax you got. Now the process itself is wasted, but still we will be completing and computing. That's it. Up to 5 lakh rupees, 12,500. Am I right? For that extra 3,390 at the rate of 20% comes to 678. So 678 plus 12,500, na 13,178. Into 4%, 527. Total tax liability 13,705. Sir, if you round off 13,007. That means if you are traveling through default tax regime, don't pay any tax. But if you are traveling through the optional tax regime, you are liable to pay 13,710 as tax. What recommendation you will give? It's better to travel through default tax regime. Since his total income as per the normal provisions of the act exceeds how much lakh? He won't be eligible for rebate under 87A. Mr. Siddharth is not liable to pay any tax under the default tax regime under 115 BAC. It would be beneficial for him to not to exercise the option of shifting out of the default tax regime for assessment year 26-27. A very much handleable question for you at this point of time. Every adjustment in DT, you are able to appreciate that. What is allowed under the default tax regime, what is not allowed under the default tax regime. Able to appreciate, my dear lovable students. That's it with regard to question number 10. Can we move into question number 11? Yes, sir. Are you feeling that happiness and comfortness between these two? I'm moving into question number 11. Ramdin, age 33 years. Okay, 33. Working as manager sales with Frozen Foods Limited, provides the following information for the year ended 31/3/2026. Basic salary, basically a salary question. Basic salary 15,000 per month. Okay. Additional information are also there. Required is also there. First, we will read the required. Compute is total income. First question. And tax payable thereon for assessment year 26/27. Assume that Ramin has excised the option of shifting out of the default tax regime. That means the question is a optional tax regime question. Super. Then from that angle, we will think and we will write. Basic salary 15,000 per month. You tell me 15,000 into 12 comes to, that's it, man. Salary question, man. So we have to finalize the income from salary. Sir, basic salary 15,000 into 12, 1,80,000. Easy. DA, 50% of it's meant for retirement benefits, 12,000 per month. For the purpose of income computation, we will take entire 12,000. For the purpose of, sir, salary definition, we will take only 50%. Am I right, sir? So 12,000 into 12 comes to 1,44,000. DA also comes to an end. Commission as a percentage of turnover of the company, 0.5%. Ara percent. The turnover of the company is 50 lakhs. So you tell me 50 lakhs into 0.5% comes to 25,000 is the commission. Even we are done with the commission also. Bonus, my dear lovable students, 50,000 straight away given in the question. Bonus is 50,000. Common gratuity is 30,000. Have the question said this employee has retired? Any gratuity received during the service is fully taxable. Please don't apply section 1010 here. So 30,000 rupees is fully taxable. Able to apply own contribution to RPF. As we all know that employee's contribution to RPF is not an income, because from this basic salary only you would have contributed to RPF. Again, don't include it in the income. Am I right, sir? Own contribution is not an income. But if an employer is contributing to RPF in excess of 12% of salary, should be treated as income. Am I right, sir? So this own contribution is not an income. But this is entitled to claim deduction under 80C. If an employee is contributing to the recognized provident fund, it is entitled for 80C because the route is optional tax regime. Employer's contribution to RPF, 20% of the salary. He can contribute only 12% of the salary. Am I right, sir? So in excess of how much percent? 12% should be taxable. What is the salary? 1,80,000. So 1,80,000 into 20% means really the employer has contributed 36,000 rupees. Less exempt. As we all know that 12% of salary is exempt. But that salary is having a definition. Salary means basic salary plus DA only provided in terms of employment plus commission as a fixed percentage of turnover. That means basic salary is 1,80,000. Am I right? Entire DA will not be computed because out of 1,44,000, 50% of the DA is only for retirement benefits. Am I right? So only 72,000 DA will be considered for the RPF purpose, and commission as a fixed percent of turnover, 25,000 will be counted. That means 1,80,000 plus 72,000 plus 25,000 comes to 2,77,000 is the eligible salary. On this 2,77,000, employer can contribute 12%, which comes to 33,240. So in place of 33,240, employer has contributed 36,000. That means extra automatically will be taxable. Am I right, sir? Because I have included 36 and I have removed 33,240. You can write in the examination inner column. Since I am calculating the computation in inner column, I have written the total amount minus removed what and all is allowed. Automatically the extra will be taxable. Sir, interest credited, the next point. Interest credited in the recognized provident fund account at 15% per annum. How much is allowed? 9.5% is allowed. Over and above 9.5 should be taxable. So 15,000 divided by 15, because this is 15. In excess of 9.5 is 4.5. Am I right, sir? So 15,000 divided by 15 into 4.5 means 4,500. Look here. I have included 15,000 and I have removed 9,500. 15,000 minus 9,500. It should be 15,000 divided by 15 into 9.5 comes to 9,500. Exempted is 9,500. So here it should be, sir, 15,000 divided by 15. Extra should be 15,000 divided by 15 into 5.5. Into 5.5 comes to 5,500 should be what? Taxable. That's what automatically happening. If I include 15 and reduce 9,500, it will be 5,500. Able to appreciate? Next one. That's it. All the information has been taken care. Gold ring worth rupees 10,000 was given by employer on his 25th wedding anniversary. Have the gift amount exceed 5,000? Fully taxable, my dear lovable students. That's what gift of gold ring worth 10,000 on 25th wedding anniversary. 10,000 is fully taxable. Music system purchased on 1/4/2025 by the company for 85,000 and given on him for personal use. My dear lovable students, if any movable asset has been given by the employer, 10% of the original cost of the asset will be treated as the perquisite. Sir, since it has been purchased and given from 1st of April itself, 12 months perquisite will come. So 85,000 into 10% comes to 8,500 is the perquisite value. Able to appreciate? Two old light goods vehicle, that means this is PGBP they are talking about, which is 44 AE, which is plying, hiring and leasing of goods carriages. Received interest, they are talking about IFOS. Made payment by check, premium on life insurance, they are talking about ATC. Investment in NSC, they are talking about ATC. Donation under ATG, they are talking about chapter 6A deduction. So we can finalize the salary chapter 1. Sir, gross salary is this much. Since the assessee is traveling through the optional tax regime, that means you shift out of the default tax regime. Macha, I hate you da macha. You are entitled to get only 50,000. The income from salary is 4,05,760. That's what the first calculation, 4,05,760. Only under one route we are supposed to calculate. Able to appreciate? Now income from house property, no information has been given in the question. Now PGBP, my dear lovable students, only this information was given. Two old light goods vehicle, 2 is less than 10. If an assessee is owning and maintaining, sir, goods carriage which is less than 10, were leased to a transport company. Again, it's a fixed charges of 6,500 per month. That will not be considered because we are having fixed amount. 7,500 per month or part of the month. Am I right, sir? Question specifically said light goods vehicle. It's not heavy goods vehicle. If it is heavy goods vehicle, per ton, 1,000 per ton per month or part of the month. Able to appreciate? So my dear lovable students, 7,500 into 12 into 2 vehicles. So 7,500 into 12 means 90,000 per vehicle into 2 comes to 1,80,000 rupees. Am I right? Because as per our calculation, 6,500 we will not consider. We will consider 7,500 per month per vehicle. So 90,000 rupees is a presumptive income for one vehicle. We are having 2 vehicles. That 2 vehicle has been owned for entire 12 months. So 1,80,000 rupees is the PGBP income. There is no capital gain data given in the question. We are having IFOS. Sir, received interest of 5,860 on bank FD. What is the age of the assessee? 33. So 80 TTB not possible. Am I right? 80 TTA is applicable only for savings bank, not for FD interest. And interest of 7,540 from the debenture of Indian company on 5/5/2025. Both these should be taxable under the head what? IFOS. So I am calculating the IFOS income, my dear lovable students. This is what IFOS, interest on FD and interest on debentures. Sir, look at here. Received interest of 5,850 on bank FD and interest of 7,540 from debentures of Indian company. Sir, FD interest, it has not exceeded the threshold limit because under section 194A, interest other than interest on securities, if the interest has been paid by the banking company, cooperative society or NBFC, then my dear lovable students, they are post office. They are supposed to deduct the TDS. There is threshold limit, whether it is senior citizen, other than senior citizen. Am I right, sir? For senior citizen, 1 lakh, other than senior citizen, 50,000. But the interest does not exceed 50,000. Then for this amount, they would have not deducted TDS. But for this debenture of Indian company, sir, as per section 193, interest on securities, sir, 10% TDS would have been deducted, and this will be 90%. So 7540 divided by 90% means the gross income is 8155. But that is not the answer given in the question. 8155 done. 7540 divided by 90%, 8377 something. Okay, right. That is not the answer given in the question, because question did not mention anything about the TDS. Now, under section 193, 10,000 rupees is the threshold limit for TDS. Am I right, sir? You go and check the limit if you are having any doubt. So the company would not have deducted what at all? TDS at all. So this 7,540 you have to write in full. Please don't apply the TDS, man. So this is, sir, put it on dustbin. IFOS is 13,400. Am I right, sir? So my dear lovable students, 13,400 is IFOS. You will be getting gross total income. Which route you are traveling? You are entitled to get chapter 6 reduction. Made payment by check 15,370 towards payment of life insurance policy. Life insurance is entitled under 80C. So under 80C, you are entitled for life insurance premium. Look at here, man. Premium on life insurance under 80C 15,370. And 22,500 for Mediclaim policy for self and spouse. Is it set number 1 or set number 2? Set number 1, self, spouse, dependent children. Since the age is normal, up to 25,000 is allowed. So 22,500 is allowed. 80D, 22,500 is allowed. Pakka. Investment in 80C is entitled for deduction under 80C, 30,000. This is also deduction under 80C. FD of SB for 5 years, 5-year FD in post office or banking company, you are entitled to claim deduction under 80C. Sir, why are you writing 80C all together? Because maximum deduction under 80C should not exceed 1,50,000. Donation of rupees 11,000 to institution approved under 80G, it's all together outline. So my dear lovable students, in addition to that, employees contribution to RPF, I already said in the start. Don't forget to claim 80C. Put together all the 80C comes to 1,25,370, which is less than 1,50,000, no problem at all. Now, already 80D has been taken care, only 80G has to be taken care. Sir, donation of 11,000 to institution approved under 80G and of 5,100 to the Prime Minister's National Relief Fund were given during the year by way of check. By way of check. Pakka. Sir, to a donation of 11,000 to an institute approved under 80G, for what purpose? Just they said that institute approved under 80G. So my dear lovable students, there are two things are there. There are 4 category of deduction under 80G are there. 100% deduction without qualifying limit, 50% deduction without qualifying limit, then 100% deduction with qualifying limit, then 50% deduction with qualifying limit. Here you should know what it is. Sir, deduction under 80G can be calculated like this. Donation to Prime Minister's National Relief Fund. Sir, if you are contributing, you are entitled to claim 100%, my dear lovable students. Because the first contribution, you look at here, to where they have contributed, donation of 11,000 to institution approved and 5,100 to Prime Minister's National Relief Fund. It is not drought relief fund. If it is drought relief fund means Congress 50%. Simply Prime Minister's National Relief Fund means category number 1, how much percent? 100%. That's why since you have contributed 5,100, you are entitled to claim 5,100 as deduction. But donation to institution approved under 80G, you are not entitled to get the 100% deduction because this is some institute approved. You are entitled to claim 50% of the donation or 10% of the adjusted total income, whichever is lower. So we are supposed to calculate the adjusted total income. To calculate the adjusted total income, I should take the gross total income. If I take gross total income, 5,99,160 is the gross total income. From the gross total income, if you are having any long-term capital gain which are taxable at special rate should be removed. But in this question, there is no capital gain at all. Am I right? Then you are supposed to remove the chapter 6A deduction other than 80G. Sir, I am claiming these chapter 6A deduction and all other than 80G, which is to the extent of 1,25,370 plus 22,500, which comes to 1,47,870. Are you able to appreciate? So the adjusted total income is 4,51,290. On this max to max, how much percent? 10 percentage. So 4,51,290 into 10 percentage comes to 45,129 is the maximum amount I am entitled to claim 80G with the qualifying limit. But to that fund itself, I have contributed only how much? 11,000. So on that 11,000, sir, reduce or restrict to 50 percentage. What is the 50% of 11,000? 5,500. So 5,500 or 10 percentage of the adjusted total income, whichever is lower, can only be claimed as a reduction, which comes to only 5,500. That means, what is the logic? If you contribute, for example, if you contribute 1,10,000 vechukko, and it is entitled for 50 percentage, sir, 1,10,000 into 50 percentage, now 55,000 it is coming. But the ceiling itself is 45,129. Here, it does not touch the ceiling, no problem. 50% of the donation, you can claim it as a Chapter 6A reduction. So 10,600 is a Chapter 6A you are entitled to claim. Able to appreciate, sir. That's it. So, yes. Already some other deductions are also there. 80C and all are there, correct? So that 10,800 I am supposed to write here and I have to add everything. So 1,58,470 is the total Chapter 6A. You will get the taxable income 4,40,690. Is the total income exceed 5 lakh? No, sir. Which route? Optional tax regime. Is there any special income? No, sir. That means, sir, for this guy up to 2,50,000 rupees will be nil. Sir, 2,50,000 to 4,40,690 minus 2,50,000. 4,40,690 minus 2,50,000 comes to 1,90,690 into 5 percentage comes to 9,535 is the total tax payable. Since the total income does not exceed 5 lakh, sir, he can claim rebate of 9,335. The total tax liability for this guy for that particular financial year is nil. That's it with regard to question number 10 and 11. Are you comfortable? You will feel the comfortable when you sit, when you do this question, man. But surely, sir, from my side, I believe that you are able to appreciate or understand the application of the provisions. That too, after doing 9 to 10 questions, you can easily trace many points. Somewhere here and there, you have to get practiced. You know what you are supposed to do. You have to sit and practice question number 10 and question number 11 and come back to me. We will knock off question number 12 and question number 13. With that, the entire computation of total income will come to an. Yes, sir. Very, very, very happy evening to all. So we are doing computation of total income, my dear lovable students. In that we have done up to question number 11. We are supposed to solve question number 12 and 13, the last two questions to be solved from our side. From the following particulars furnished by Mr. X for the year ended 31st March 2026, you are requested to compute the total income. Okay, fine, we will compute the total income and tax payable for the assessment year 26-27, assuming that he opt out of the default tax regime. That means going to travel through the optional tax regime. Only this much is there. Super. Mr. X retired on 31/12/2025 at the age of 58. After putting 26 years and 1 month of service from a private company at Mumbai. He was paid a salary of 25,000 per month. So, April, May, June, July, August, September, October, November, December, 9 months he has served. So, in the current year, 25,000 into 9, 2,25,000 he would have received the salary. That's what the first one, sir. Income from salary, 2,25,000. 25,000 into 9 done. Yes, total 2,25,000. And HRA of rupees 6,000 per month. Even HRA would have been received for 9 months. So HRA 6,000 into 9 comes to 54,000. Am I right, sir? He paid rent of 6,500 per month during his tenure of service. That can be claim it as 1013A because HRA received is there and the rent payment is there. On retirement, he was paid a gratuity of 3,50,000. He was covered by the payment of gratuity Act 1972. Mr. X has not received any other gratuity at any point of time earlier other than this gratuity. That means the statute limit of 20 lakhs is not exhausted. He has accumulated leave of 15 days per annum during the period of his service. This was encashed by Mr. X at the time of his retirement. A sum of rupees 3,15,000 was received by him in this regard. His average salary for the last 10 months may be taken at 24,500. Employer allowed 30 days leave per annum. Yes. After retirement, he ventured into a textile business and incurred a loss of 80,000 for the period up to 31/3/2026. Business loss can be set off against any head of income except salary. Mr. X has deposited 1 lakh in PPF. You are entitled to claim deduction under 80C, my dear lovable students. Am I right, sir? So, simple calculation, simple question. This is 2,25,000 rupees. Salary is there. And he has received HRA also. Sir, HRA of 6,000 per month. We have to calculate the taxable HRA and we have to reduce the standard deduction. So, can we do everything as working note? These are the income from salary computation. Basic salary is 25,000 into 9, 2,25,000. HRA received. Sir, how much is the per month HRA? 6,000 per month. So 6,000 into 9 months, we would have received HRA 54,000. Now exemption under 1013A, which is least of the three. Rent paid in excess of 10% of salary. Actual HRA received 50% of salary in metropolitan cities like Mumbai, Calcutta, Delhi, Chennai, and 40% in other places. Actual HRA received is 54,000. Rent paid in excess of 10% of salary. Here salary means only basic salary. Nothing, no other information is there. What is the basic salary? Basic salary 2,25,000. So 2,25,000 into how much percent? 10%, which comes to 22,500. What is the per month rent? 6,500. So 6,500 into 9 means total 58,500. Out of that 58,500, 10% of salary is disqualified. 58,500 minus 22,500 means extra 36,000. That's what rent paid in excess of 10% of salary. 50% of salary, which is nothing but 2,25,000 into 50% comes to 1,12,500. So the least of the three is 36,000, my dear lovable students. So from the actual HRA received of 54,000, if you reduce 36,000, you will be getting 18,000 rupees as the taxable HRA. Automatically 54 minus 36, you will get 18,000. Able to appreciate? If you want, you can make it inner column and write the 18,000 in the outer column. There is no problem. Now come on to gratuity. Actual gratuity received is 3,50,000. Already given in the question. Sir, it is exempt under 1010. Sir, least of the three, statute limit of 20 lakh. Actual gratuity received 15/26 into last drawn salary into completed year of service. That's what I'm going to compute here, man. Actual gratuity received is 3,50,000. Sir, 15/26 is 15/26. Into last drawn salary straight away given in the question. They themselves said that. If you see, sir, he has not received any other gratuity and all. At the time of retirement, 25,000 per month is the last drawn salary. Because the last drawn salary means basic salary plus DA. All DA should be considered because this guy is covered under the payment of gratuity Act 1972. Am I right, sir? That's why 25,000. Into how many years of service? 26 years. Since the extra is only 1 month, only in excess of 6 months should be treated as 1 year. So, I will be treating it as 26 years. So, the eligible gratuity is 25,000 into 15/26 into 26 comes to 3,75,000. 3,70,000 and statute limit of 20 lakh. You tell me whichever is lower. 3,50,000 is lower. That means how much he has received? 3,50,000. Entire 3,50,000 is exempted, my dear lovable students. Nothing will be taxable. Coming to leave encashment. Actual leave salary received is 3,15,000. As per section 1010AA, least of the 4 is exempted. Statute limit of 25 lakh. Are you remembering? That's what statute limit of 25 lakh. Actual leave salary received 3,15,000. Last 10 months salary. Last 10 months salary. That's it. Sir, last 10 months salary means, look at here, man. What is the salary details they have given? 25,000 per month. Is there any incremental concept and all given? What is salary means? Salary means basic salary plus DA if provided in terms of employment plus commission as a fixed percentage of turnover. Is there any DA concept? No, sir. But here, look, is average salary for the last 10 months may be taken at 24,500. Avasarapattu 25,000 into 10 if you put, and if you are taking 2,50,000, you have not read the question properly. It should not be like that. So the average last 10 months salary is 24,500. So 24,500 into 10, 2,45,000 is the last 10 months salary. That's what you are supposed to count, man, 2,45,000. Now, cash equivalent of leave credit calculated at the rate of 30 days per annum for every completed year of service. My dear lovable students, how many completed years are there? 26 years. So 26 into 30, this many days this guy can take leave. So 26 into 30 means 780 days leave are allowed. Am I right? My dear lovable students is having accumulated leave of 15 days per annum. That means 15 days is a credit available. So I don't want to do this. Straight away 15 into 26 years. This many 15 into 26 means 390 days credit are there. 390 divided by 30. That means 13 months extra he has worked. If you want, I will repeat once again. Sir, every year he has not taken leave for 15 days. Into how many years he has worked? 26 years. So 26 into 15 means it comes to 390 days. 390 divided by 30 means it is equal to 13 months. That means 1 month average salary is 24,500. 24,500 into 13 comes to 3,18,500 is the cash equivalent of leave credit. That is what 3,18,500. You tell me what is the least? 2,45,000 is the least, my dear lovable students. 2,45,000 is the least. Am I right, sir? So what is the actual leave salary received? 3,15,000. From that 3,15,000, if you reduce 2,45,000, balance will be automatically taxable. So if you do all this, you will be having gross salary of 3,13,000. Pakka? Which route? Optional tax regime. You are entitled to claim Chapter 6A deductions. Am I right, sir? Is there any amount deposited? Yes, sir. Where? PPF. You are entitled to claim 80C. Sir, what is the gross total income you are having? 3,13,000. From that 1 lakh, can we claim it as a Chapter 6A? Gross salary. Okay, salary. First we will finalize the salary, then we will come to it. Sir, 3,13,000. From that, sir, we will be reducing the standard deduction. Come on, man. I love you, da. I hate you, da. I hate you, da. 50,000. So the taxable salary will be 2,63,000. My dear lovable students, 2,63,000. There is no information regarding IFHP. I can write it nil. Am I right, sir? Sir, after his retirement, he has gone and he has made a loss of 80,000. Sir, business loss can be set off only against any head of income except salary. So this 80,000 has to be what forward? You can't do anything that 80,000 to be carry forward. No capital gain information, no IFRS information. You will get gross total income. Now from that gross total income, since you are traveling through the optional tax regime, you are entitled to claim 1 lakh as Chapter 6A. 1,63,000 is the taxable income, my dear lovable students. What and all they want? They want total income and also the tax payable. What route? Taxable income is only 1,63,000, which is less than 2,50,000. Sir, there is no tax on total income is nil. Since it is lower than the basic exemption limit of 2,50,000, at least one answer we can write without any mistake. There is no question of 87A. There is no question of, sir, health and education says at the rate of 4%. Nothing is there, my dear lovable students. With that, question number 12 also comes to an end. Are you able to appreciate, sir? Yes, sir. All these calculations I have made for you. The last question from our entire subject of DT. Question number 13. Rosie Mary are sisters, born and brought up at Mumbai. Rosie got married in 1982 and settled in Canada. That means Rosie is a non-resident since 1982. Mary got married and settled in Mumbai. Both of them are below 60 years. Okay, fine. Following are the details of their income for the previous year ended 31/3/2026. Basically, sir, one game we have played for scope of total income. Am I right, sir? Rosie is a non-resident, whereas Mary is resident and ordinarily resident. Global income is taxable. Pension received from state government. Mary is getting pension from state government. Where state is there? India. Income has been accrued or risen in India. So it should be taxable under the head income from salary. Am I right? Because this is not family pension. Only family pension will go and sit in IFOS. Normal pension received by the employee will taxable under salary. Don't forget to reduce 50,000 rupees standard deduction or 75,000 rupees standard deduction. Compute the total income and tax liability of Mrs. Rosie, Mrs. Mary for 26-27 and tax thereon. Assume both excise the option out of the default tax regime. Default tax regime pole. That means they are going to travel through optional tax regime. If they are going to travel through optional tax regime, 50,000 rupees will be the standard deduction. Look at the answer, my dear lovable students. Sir, income from salary, only Mary is having income. 60,000 rupees is the pension. Standard deduction 50,000. Balance 10,000 will be taxable salary. Can I proceed? That's it. First one done. Come on, sir. Next one. The second income. Sorry. Yes. Pension received from Canadian government. 20,000. Sir, Rosie is a non-resident. Sir, if Rosie is getting pension from Canadian government, income has been accrued or risen outside India. Sir, A.R. Rahman, A has not been satisfied. Even R has also not satisfied. It's a foreign income. Foreign income will not be taxable in the hands of the non-resident. So this 20,000 will not be taxable here. Are you all really with me? Yes, sir. Next one. Long-term capital gain on sale of land at Mumbai. Sir, Mumbai. Mumbai means the income has been accrued or risen in India. Sir, it will be taxable in both in the hands of Rosie and Mary. That means capital gain 1 lakh and 1 lakh will be taxable. We have already played this game. Short-term capital gain on sale of shares of Indian listed company. Indian listed super asset. In which SGT has been paid. So this is covered under 111A. Am I right, sir? My dear lovable students, since the asset is situated in India, sir, it is taxable both in the hands of Rosie and Mary. So 20,000 and 2,50,000. Any problem? LIC paid, can we claim it as deduction under ATC? Sir, dash and 10,000 ATC because the asset is traveling through the optional tax regime. Premium paid to Canadian Life Insurance Corporation of Canada, 40,000. That can we claim it as deduction. Life insurance premium can we claim it as deduction. Under what? ATC. Sir, whether it is to Indian LIC or Canadian LIC. If you are earning, sir, income outside India, taxable in India, like claiming expenditure outside India also can be deduction, should be allowed. Am I right, sir? Yes, sir. No restriction for ATC. We have not studied. Medical insurance policy paid, 80D, 25,000 can be claimed. That's what, man, below. Deduction under 80D, 25,000 can be claimed. Deposit in PPF, 20,000. Deduction under 80C, sir, PPF, Public Provident Fund. Sir, deposit in PPF, it is an ATC family. Comfortable, sir? Rent received in respect of house property in Mumbai. This is rent. You have to claim 30% standard deduction. Only 70% should be taxable. So 60,000 into 70% na, 42,000 will be taxable. 30,000 into 70% na, 21,000 will be taxable. So 42 and 21 will be the taxable. Look at here, man. IFHP 42,000 and 21,000. So salary finalized. Salary finalized and what? IFHP finalized and capital gain finalized. If you add all the three, you will get the gross total income. From the gross total income, if you reduce chapter 6A of this much amount, you will be getting the, sir, total income. This is the total income. Because here she is entitled for 40, subtotal of total 40. That's it. There is no here. So total 40. So you tell me from 1,62,000, if you reduce 40, 1,22,000 is the total income. Am I right, sir? Come on, sir. Sir, here 10 plus 20, 30. In addition to that, 25 is there. Total 55. What is the gross total income? 3,81,000. From that 3,81,000, if you reduce 55, you should get 3,26,000. Am I right? But when I analyze the gross total income, only 10,000 is salary. Again, salary, chapter 6A allowed. Only 21,000 is IFHP. Against IFHP, chapter 6 is allowed. So 10 plus 21 comes to 31,000. Against capital gain, chapter 6 is not allowed. So it should be restricted to 31,000 rupees only. Chumma add panni minus pannena, sir, you will get a big hit. Now I believe that you are experts in all this. Am I right, sir? So from the gross total income of 3,81,000. If you reduce the other income, you will be having 3,50,000. And this 3,50,000 represent only what gain? Capital gain, which is this 3,50,000. Look, capital gain 3,50,000. Because after claiming deduction, Chapter 6A deduction against capital gain, you are not supposed to claim Chapter 6A deduction. Easy. So I'm going to calculate the tax payable for both the people. You tell me first one, Rosia Media. Rosie is having total income of 1,22,000. 1,22,000. What is the status, residential status of that? For non-resident, there is no age benefit. Even though they are less than 60 years, my dear lovable students, unexhausted basic exemption limit can be knock off against a special income only for resident. This guy is a non-resident. So even though she is having income less than 2,50,000, sir, this 1,22,000 represent long-term capital gain 1 lakh. This is covered under 112. 112 will be taxable at 12.5%. Am I right? So 1 lakh into 12.5% come to 12,500. Any problem to anyone? The short-term capital gain which are covered under 111A, which will be taxable at the rate of 20%. So 20,000 into 20% comes to 4,000, my dear lovable students, 4,000. The balance 2,000, nothing will be taxable because that is basic exemption limit. So still unexhausted basic exemption limit is there. That benefit will be available only to resident, not to non-resident. So 16,500. On that, you are liable to pay health and education. Says, sir, 16,500 plus 660. 16,500 plus 660 comes to 17,160. You tell me for trip, sir, the taxable income should be less than 5 lakh. And the assessee should be resident. Is the assessee resident? No. So 87A rebate also not applicable. That's why even though the income is less than 5 lakh, I have not claimed 87A, I have taxable. Are you able to appreciate, sir? Come on, man. Tax liability of Mrs. Mary. Mary is a resident and ordinarily resident. What is the taxable income? 3,50,000. Which are fully capital gain. Sir, she is having long-term capital gain 1 lakh and short-term capital gain covered under 111A 2,50,000. What is the basic exemption limit applicable to her? 2 lakh. That 2,50,000 pakka short-term capital gain fully adjusted. Because that short-term capital gain is covered under 111A, which will be taxable at 20%. It's better to knock off the basic exemption limit against higher rate of tax. So short-term capital gain becomes 0. There is no unexhausted basic exemption limit. If there was something, we can knock off against long-term capital gain, but nothing is there. This long-term capital gain is covered under 112, not under 112A. If it is 112A, in excess of 1,25,000 would have been taxable. So 1 lakh into 12.5% come to 12,500. Am I right, sir? Sir, 12,500. Since this is covered under 112, not under 112A, rebate under 87A is possible. Rebate under 87A is because this is what route? Optional tax regime. In that one point, I just want to highlight, even I have made a mistake in yesterday's calculation, my dear lovable students. Sir, there are two routes are there, optional tax regime and default tax regime. Am I right, sir? Under optional tax regime, 87A rebate will not be applicable under 112A. The logic or the reason is both are having A. That's what I said. Because under 112A, only in excess of 1,25,000 is taxable. Again, that itself is one type of rebate. If you are again claiming an 87A rebate, it will be a double rebate. Double rebate will not be allowable. That's what the logic. But under default tax regime, 87A rebate will not be applicable under 112, 112A and 111A. None of the special section, this won't be applicable. That is the reason why in yesterday we have done one question. In class we have done one question. If you see, if I am not wrong, yesterday's last question is question number 9. 9. If you see question number 8, my dear lovable students, we were having this tax liability. Please come. Yes. Here, in question number 8, compute is total income, tax liability and advance tax obligation under the what tax regime? Default tax regime. Default tax regime. Look, sir, actually, this is long-term capital gain under 112. I said that against this long-term capital gain, please claim 87A. I will go back. This is very important since it is amendment. I will go back and I will reach or teach the normal one. Look at this man. This is an amendment for our examination from assessment year 26-27. Our year is 26-27. Rebate under 87 is not available on tax on income chargeable at special rate under any provision. Example, tax on capital gain covered under 111A, 112, 112A, tax on long-term capital gain. So if you are traveling through the default tax regime, last year this was not the provision. So even I missed when I solved the last day class. Okay, this is an amendment, my dear lovable students. So you can understand like this. There are two routes are there. Optional tax regime and default tax regime. Under optional tax regime, 87A will not be available against 112A. That means against 112, 87A available. 111A, 87A available. Are you really with me? Whereas under the default tax regime, 87A will not be available against 112, 112A, 111A. Surely in the current exam question, this adjustment will be there. Now, based on this, if you see the question, my dear lovable students, look at here. What tax regime you are traveling now? Optional tax regime. Optional tax regime, this is, sir, 112. Correct? 112. What? 1 lakh. 1 lakh into 12.5% is long-term capital gain 112. Sir, this 12,500 is 112 against 112 under optional tax regime. 87 allowed. That's why I'm claiming 12,500. But the same thing is under what tax regime? Default tax regime. 87 is not available as per amendment. It's a very important amendment, my dear lovable students. Hello, sir. Sir, that's their writing note. In case of resident individual, if the basic exemption limit is not fully exhausted against other income, then the long-term capital gain covered under 112, short-term capital gain covered under 111A will be reduced by the unexhausted basic exemption limit. And only the balance will be taxed as per the rate under 112 or 111A. This point you know. That is unexhausted basic exemption limit adjustment is applicable only for residents, not for non-resident. However, this benefit is not available to. Therefore, while Mrs. Mary can adjust unexhausted basic exemption limit against long-term capital gain, taxable under 112 and short-term capital gain taxable under 111A, Mrs. Mary cannot do so because Mrs. Rosie is a non-resident. Sir, basically, unexhausted basic exemption limit will be applicable only to resident. Unexhausted basic exemption limit will not be applicable to non-resident. Since long-term capital gain is taxable at only 12.5, and short-term capital gain is taxable at 20%, it's more beneficial of Mrs. Mary to exhaust her basic exemption limit of 2,50,000 against short-term capital gain of 2,50,000. Correct? Because claim the basic exemption against the higher rate of tax. Rebate under 87A would not be available to Mrs. Rosie, even though her total income does not exceed 5 lakh, since she is a what resident? Non-resident, because 87A will be applicable only to resident, my dear lovable students. That benefit will not be applicable to a non-resident. That's what the tax payable. So the tax liability of Rosie is 17,160 and tax liability of Mary is nil. Since she is a resident and ordinarily resident, she can claim 87A rebate. She can claim unexhausted basic exemption limit. All this benefit will be available. Whereas since, sir, Rosie is a non-resident, unexhausted basic exemption limit cannot be claimed against special income. And number 2, 87A rebate is not possible. With this, my dear lovable students, we can say that our gigantic subject called as DT comes to an end. All the computation of total income which are there in the ICA study material, illustrations and book back has been solved. Only thing is you have to practice. Once you practice, you will be getting the best experience of solving this, my dear lovable students. Sir, I believe that the session of the DT is very, very, very comfortable for you all. Start revising from the first. You will be feeling so much comfortable. I am wishing to each and everyone, those who are going to write in May, those who are going to write in September and also in Jan. And for all the 3 category of students, these lectures will be perfectly applicable for you, my dear lovable students. We'll meet at the appropriate time. Thank you. Bye-bye from ANM.